Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Another great day, another green day. There's always opportunity in the market. Morning, good afternoon, good evening. Hello. Let me just stop this. Got some music over here. There we go. Not quite sure what was happening there. There we go. That's fixed that. Slight issue back at the studio there. I'll explain why that was in a few moments. Something very special happened last night. It's just thrown things off a little bit. Right, so let's bring up the information on the screen that you need. All the links are below in the chat. So you've got all of that in the description. And let's read your comments. A lot to discuss today. My portfolio is up. The Roth is up. And I'm at new all-time highs because I'm just about at 71, but actually I'm at 72 because I took $1,000 out and for my gold, and also reduced a position by 50%. I've sold one of my major positions this morning, 50%, and I'm going to discuss why, and I want to get your thoughts on it. All right, so we'll give it a few moments, and I will explain exactly what we're going to do. Let's read these comments. Good morning, family. Henrik, good morning to you. Henrik, good morning. Big upward trend since COVID. Steve Wally, hi, family. USAC. Steve Wally, we need to look ahead and go beyond sunbathing what we already achieved. Let's roll forward. Very, very good point. Is there an impersonator in the house? Yeah, it's one of my monitors. I have the audio up. Morning all. Ed Nevius. Ed, I'm glad you're here. Some lovely news that I want to share with you. Reference George. And you were the one that created all of it. So let me explain that in a moment. All right, you're going to love this. Mike. Cheers, Mike. Welcome to all of you. Okay, let's give it a couple of minutes for everyone to get in here. Virgin Galactic is up today. Palantir, still too expensive. Gold going up. It's going to be 40% next year. S&P has gone up again. Amazon just trimming off, but it's up. Apple is up. Next year energy is up. Just 7% to go. Enphase Energy is still running. This is the big story of the day. I will cover this in a moment. Coca-Cola is flat today. I'm up 7% now. J&J down very, very slightly. Kenvue up 5.5%. Chevron, my oil, is now up nearly 0.25%. I'm making money now on oil. Tesla is up. Rivian is up. McDonald's is flat. I'm up nearly 6%. Google is up, too expensive. Microsoft is up. Walmart is down slightly, but I'm up 2% now. Tesco, Tilray, rubbish. Robinhood up again, 1.76. Very nice. I'm up 39%. It's a 4x. IonQ, Rocket Lab, Plug, down slightly, down 10% overall. Procter & Gamble, Rumble, Funware, FFIE, Rio Tinto, Bitcoin up 0.1. It's 42, nearly 43,000 now. Might see it go to 43,000 live. Is it going to go there? Polygon down 2.98, 78. I bought it for 33. And Ripple at 61, bought that for 38. And that's a $7 coin, in my opinion. All right, now then. Now everyone's here. We've got a big debate. I'm going to make a special video. Good morning, Mike. Good morning, Julian Torres. Okay, let me see how many people we got in. I want to share some special news. If you've just come on in, subscribe and ring the bell, and just tap the like button would be absolutely great. If you wouldn't mind, that would be awesome. Right. Let me, first of all, explain to Ed. Are you still here, Ed? Let's make sure Ed's here. Ed, are you still here? Are you here? Are you here? Let me just do that there. Yes, make sure he's here. I'm sure he is. Let me go members only just for a moment because it's a very special moment. And we don't want any trolls to spoil it. Let me just go to members only just for a few moments. Yes, I'm here. So we've got a couple of things. We have got a cash prize giveaway, $100 cash prize giveaway. I'm not going to tell you the details of it, but we've got that coming up for Christmas. Ed Nevius would like to do something. I'm going to speak to Ed today about that. So listen up, be part of it. A $100 cash prize giveaway. But more importantly than the $100 cash prize giveaway, as you know, we're in members mode now, family mode. Yesterday, one of my dearest friends here in America died, a few days ago died, and that was George's wife. You know George, he's been on the show before. He's 84, I think he is now. I always forget whether he was 82 or 84. I can't remember how old I am, so you've got no chance. Anyway, 82, 84, something like that. And his wife of 60 years, just under 59 years actually, passed away over the weekend. And last night, I was doing my video Christmas cards on my music channel. And the idea was people would phone in, do a super chat. I would make them a video Christmas card for a Christmas gift at Christmas, essentially, obviously. And Ed Nevius decided to come in. Ed Nevius came in and said, do something for George. Well, I happen to know, because George and Elaine came to all my gigs over the years, and the last 7 years I've been in America, and I knew what their favorite song was because I played it to them every time they walked through the door. And it was Charlie Pride, Kiss an Angel Good Morning. So last night on the show, Ed Nevius gave me a super chat, $9.99. In fact, he did $40 last night. And he said, sing a song for George. And I said, I'm on the way to see George. I'm going to go and see him in an hour. I'm going to go to his family and see him in an hour. So I did the message from Ed, from the members, from the family, sung the song, and I said, George, in the video, I'll see you in an hour, and in an hour from now, I can play this to you. So I went round his house, his children were there, and they've got a massive TV, like a cinema TV with a great big sound system, like what I've got in the studio here, actually, and it sounds fantastic. So we played, the whole family gathered around the TV. This is because of Ed Nevius last night. And we sat down, I explained what Ed did and the family and the global audience, and we're here to help people and support people. We sat down in front of the TV and we played the clip, the little bit that I sung the song, and George absolutely loved it. He was in tears. It meant the world to him. He said, pass on my thanks to Ed and the family. The family loved it. They're all sharing it around. They want it played, as a memorial. They're sharing it to all their family and friends, and they were deeply moved by it. So Ed, I want to thank you. You made an old man last night very happy, if not tearful. The family loved it. Everyone loved it. And it will be remembered forever because it will live on the channel forever, and they can go and listen to it. And that was the moment when everybody came together, and it's great. So really, really great. So Ed, thank you for that special moment. Really, really great. All right. I just wanted to share that with Ed and the family this morning. Let me go back to general public now. Now, for those of you that missed the video, the event, we are doing another one on Friday, and that'll be your last chance if you want a video Christmas card made for your loved one on Friday. So make sure that you stick around for that. So the next one will be here. Let me refresh the screen. Let me share with you. Now then, this is the next one. This will be Friday. If you want to join me for this one, this is your last chance to get a video Christmas card. Now, let me just give this to you. There is the link. Video Christmas card. In fact, let me put it in here. And if you want to get your video Christmas card just in time for Christmas, then you can. Right, I'll give it you like this, actually. It's probably easier. All right. There you go. Right, I'll pin that to the top. That's this Friday if you want to be part of that. Otherwise, that'll be your last chance this year. Right. Okay. Let me just, and we've got another important announcement. As you can see, my portfolio is exploding again, hitting all-time highs again. We've got more reviews to do today. As you can see, we're at 72 because we took 1,000 out, which will come back with a 10% gain and a 25% discount for gold when it IPOs. More of you contacted Jeff, the CEO of our gold mine yesterday. So you are in there. Brilliant. Now then, let me just welcome everybody in around the world. And then we've got a big video to make. And we've got reviews to do. More reviews today. Okay, so let's first of all welcome our guests on LinkedIn. This is where I talk to the CEOs. Lots of love coming in there. Thank you so much indeed. Let me give the Christmas card invitation to those on LinkedIn. Let me give the Christmas card invitation, last chance, to those on Kick. Let me give it to those on Rumble. Oops, that's taking some time to load. Let me just drop it in there. That's taking a moment to load. Oh, it's running an ad. There you go. I'm running an ad on my own show. There we go. Can I get past that ad? Oh, skip ad. There we go. All right, there's that. Let me give it to my audience watching me on X. Thanks for all the reposts, by the way, folks. There's the video Christmas card live event. And on Facebook. And I'll also drop it into Twitch as well. There you go. There you go. Drop it in there. Okay. All done. Right. Have I got all the questions covered? GGAAPL. Do you mean Apple as in APPL, or do you mean I'm not sure. Let's just clarify. GG, you need to be a member. If you are a member of our channel, you can AAPL, I beg your pardon, Apple. If you are a member, you can ask me for a review, and I will do up to an hour-long video, especially for you, to review a stock. So let me give you the invitation. We've got a list to do for our members first. Is J&J a buy? Absolutely, J&J's a buy. Absolutely, J&J's a buy. Zed Hink. Greeting from the member zone. I love it. Okay. Now then, Buckaroony. Hi all. Just want to say thank you for a very in-depth review on Polestar yesterday. I actually purchased more after so standing at 500 shares. I think it's an interesting one, much better than Lucid, much better managed company, I think, from what I could see, from what we found out. Anyway, we've replied to all the messages. We've brought you up to date. Now it's time to we've got a review this morning. The next review is for Pat M. Pat M. Is Pat M here this morning? We've got a review coming up shortly. Pat, no, she's not. Is R3A here? No. Is Michelle here? No. Is Jonas here? No. Is Church of Logic here? No. So our next review will be for Pat M. Now then, before we do that, I've got to make a special video. Can you quickly bring ABSI to the display? Thanks. This is one of the top performers lately. I can't. Oh, I am. Pat M. I am here. I don't know why it didn't come up. Let me go PAT. Let me just try that again. At Pat. There you go. You are here now. All right. Hello, hello, hello. So, Pat, I will do your review just after the bell. So, first of all, we need to make a very important video. Are you ready? So, it's 20 minutes in. I did a big move last night. This morning. Win on the markets. Okay. Okay, here we go. Now then, bring up my poll. There's my poll on X. Now then, let's see what everyone says to this. You ready? So, how I consistently beat the market, consistently beat Warren Buffett, and consistently beat the S&P 500. In this video, I'm going to explain my strategy and something I did this morning, just an hour or so ago, and the whole complexity of it. Because investing is very, very simple, but at the same time, it's rather complicated. Let me explain exactly what I mean. In this video, I'm going to share with you a move I made this morning, why I'm consistently beating the market, why I'm consistently beating Warren Buffett, and why I make the decisions I do to achieve the goals that I've got. First of all, full disclosure, this is not financial advice at all. This is my real life experience. This is my real money. And I started with $5,000 2.5 years ago. This is my brokerage account. That's across all my portfolios, by the way, $5,000. And for the first year and a half, no income coming in whatsoever, just trading. There is my Roth IRA, and there is my overall balance, 71,115. Actually, I'm at 72,115 because I've just taken out $1,000 to turn into a convertible note, which will come back with a 25% discount and a 10% bonus straight away. So that will go up dramatically in the coming months. So as you can see, I've done rather well. And I've never shorted a stock. I've never done options. I use margin when it's the right time, and timing is everything with margin, currently 8%. So let me explain what I did. And I ran a poll this morning. This was the poll I ran, and I'm still running it, and you can still vote on it. This video is being made in a live video. I just sold 50% of my Enphase energy. Now, I've been saying Enphase energy is a 4x, a 3 to 4x. And it is. Well, why would I sell it then? Why on earth would I sell 50% of Enphase Energy? Well, I made a 23% profit. I got my seed money out. Now it's all free shares. And I cleared 11,000 of margin at 8%. Let's discuss this now and explain the strategies of consistently beating the market. It's very, very important. And sometimes it's a struggle with your emotions, because your emotions are telling you that you know that you bought the company, not the stock price, and the stock price is still going up. Why would you want to sell it? Well, you have to manage your portfolio. You have to manage your risk. I sold it at 25.60. We're now at 128.54. So it's gone up a few dollars since I sold it. Was I right to sell it? Yes. And let me explain exactly why. So the first thing you need to understand, when you invest on the stock market, nobody, whether you're Warren Buffett or Jimmy Buffett, to quote a phrase from the Wolf of Wall Street, no one knows whether stock prices are going up, down, sideways, or in circles. And that's a very, very important fact. However, I don't really care about the stock price because I buy the business. So how can I own the business? Because if I want to buy a business, I want to keep the business because I believe the business will make me money long term. I want to be able to wake up 6 months from now, a year from now, 6 years from now, and my portfolio is consistently up, consistently outperforming the market. And that is completely possible because I do it all the time. And Warren Buffett. Well, how do I do that? You have to manage risk. And you also have to understand the sentiment of the market. Whether you like it or not, stocks go up, stocks go down, and no one knows why. Why did I buy what I buy in the first place? The first thing we need to discuss is why I bought Enphase in the first place. Enphase, because I've studied the balance sheet, I've studied the numbers, and let me just bring it up on screen live for you, told me that Enphase was a great company. It's very well managed. It outperforms the other solar industries. If you believe in solar, which I do because I have and I know how effective it is, and we can see that it's undervalued across the board other than the worst case, which we're not in, but there's always a potential. We know that, but now the undervaluation is getting very close to zero. Yes, as you know, I'm prepared to spend 25% overvaluation in a high growth stock, but we have to manage our risk. Let me explain in detail in a moment. So I have already identified that I want to buy Enphase. I already know Enphase has a great balance sheet. I already know its margins are increasing. I already know the CEO. I've spoken to him on X. I know it's a well-run company and it outperforms the competition. I know its short interest. I know its solvency, its profitability. I've made all these calculations and come to the conclusion I want to own Enphase. However, I've only got so much money, just as everybody else does. There is nothing wrong with using margin. However, you do pay currently 8% on that margin. So if you're not making 8%, it doesn't make sense to hold margin forever. There's a right time and there's a wrong time. What you want to be able to do is buy a company, not a stock price, when it's oversold, which it was, dramatically, went as low as 70. I bought massively in at 70. But remember, I first bought in at 150 because that's where the company was worth. It wasn't worth 70. It was oversold, undervalued at 70. So I was in at 150. It was the right thing to do. Then we had the bad news. Everyone dumped it because they don't want to wait 2 months. Remember, Wall Street are investors. They're gamblers. They are traders. They don't care about tomorrow. They care about today. Everybody dumped it. So I bought it. And everyone said, you're wrong. It's going down to $10. It was never going to $10. It couldn't possibly go to $10. I bought it, went all in on margin, and ended up with $22,000 worth of Enphase at 8% margin at $70. My average came all the way down to 101. from 150. Great. My average dropped all the way down. However, now it's 128. So this morning, reading the news, looking at the numbers, realizing there would be a pop this morning, knowing there'd be a pop, I bought it. It went up a couple of percent. It's gone up another 1.5% since then. I sold it because later on, this will retrace. It will come back down again. I didn't want to wait for any more profit. Does that make sense? You're going, why on earth would, if you thought it was going up, why wouldn't you continue riding it for a while? Well, there's a very good reason. As I said at the beginning of the video, investing is very, very simple. Identifying a profitable company, a well-run managed company, it's just research. It's very easy. Just read the numbers. However, the hard part is to keep it. It's very, very easy to make money on the stock market. It's as easy as falling off a log, especially when we're in a bull market and a rally like we are now. However, the hard part is to keep it and manage your risk. So you have to know the whole complexity of the investment and of the trade. When I buy a company, I am mindful that I'm buying the company, not a stock price. I've got 5 moves ahead. I know 5 moves ahead what I'm going to do. Just because I've identified as a 3 or 4x doesn't mean to say I won't sell at some point. And I always announce it before I make it. And I did it this morning on Enphase on X. Just before I traded it, I did it so you knew what I was doing. On paper, I posted a loss. We're coming up to the end of the year. I don't like paying tax on my gains. Who does? Well, there's a way to manage that. You do it in your Roth IRA. You trade in your Roth or your ISA if you're from the United Kingdom. I bought this on margin. You can't use margin in your Roth. I didn't have $20,000 to buy $20,000 worth of Enphase, so I used margin. Margin is 8% over the year. If you look at my portfolio, I've actually made in 1 month 26%, actually 30% a few days ago. Started to trim off now, and there's a reason for that. So I made 30% in a month on margin, which cost me 8% for the year. So obviously it was a good thing to do. However, short-term trades in your brokerage will accrue a 20% tax expense, because short-term capital gains in your main portfolio will have a 20%. If you are a taxpayer, I don't know your position, but everyone's different, I would pay 20% tax. So how can I trade, make money, not pay tax, reduce the margin if I'm now heading to a position where I'm not going to make 8% and I'm paying 8%, so I want to balance that out? The way to do it is, before I've made too much money, before I've got too greedy, I've already made 26% on Enphase. And remember, I was down about 80% because I was at 150 and it crashed to 70. I was down 80%. So how much profit do I deserve? Seriously, from 80% down to 26% up in the space of a month or two. Very, very good. Outperforming the market, outperforming Warren Buffett, outperforming everything. Brilliant. However, I don't want to pay tax on those gains. So I do a small calculation on the back of my hand and realize I've made enough money that I can reduce the size of my allocation, bring it back into balance, because I had $22,000 of Enphase. It was massively overbalanced. My portfolio is not the Enphase Energy Club. I'm not a fan club. I'm a balanced portfolio investor, consistently beating the market, right? So I decided to sell 50% of my Enphase. Now, this is the important part. The shares I bought first, FIFO rule, first in, first out, were the ones that were sold. So the majority of my shares that I sold on paper were actually for a loss. So as we come to the end of the year, my tax bill, again, and it's been consistently every single year, has been zero. Paid no tax. So not only have I made money consistently on the market, I've paid no taxes. Very, very good. End phase is trimming now. So I sold before it popped any more to enable me to reduce my position, to get my seed money out. The money I'd first put in, I've got out as free shares. I actually made $4,000 profit. But on paper, I lost money. So now I don't pay any taxes. My margin was reduced by $11,000. That's about $2 a day. My interest payment will come down. I didn't pay any tax on it. I've brought my portfolio back into balance. I've still got $8,000 because I sold 50%. I didn't take all the seed money out and just leave $4,000 because I know the stock is going up. It's still a 3x. I want it to be a big part of my portfolio. However, I wanted to reduce it, bring it into balance with all my other stocks. $8,000 is a very strong stock. Very, very. I don't think other than J&J, I've got anything which is Coca-Cola and J&J is the only two things that are more than that. But that's okay because they're defensive. And when we get the drops in January and start again, they will remain where they are. So that's important. They can be there. And they're also dividend paying stocks. I'm also heavily in solar with my other investment, which is Nectar Energy, which was also oversold, also rising, but provides a dividend. So that's very important. So I brought my portfolio into balance. I've got my seed money back out. I've left some extra money in because I know it's going to go up. I've not paid tax on it. I've reduced my margin from 8%, which is 8%, saving $2 a day forever now, as long as I have margin at least anyway. At that level. So my overall portfolio is in a much stronger position. So that's why I'm consistently beating the market, consistently beating Warren Buffett and improving my position all the time. No matter how bullish on a stock I am, you have to still manage your portfolio. And there's one final perk and one final benefit to this puzzle. On Robinhood, you can do another wonderful thing, and I'm about to do it. You're going to see me do it in the next couple of weeks. Not today. What is it? The Roth IRA. What that is simple. I can transfer money, whether it's selling stocks, using margin, and remember, I'm still in margin at the moment, even though I've reduced it by $11,000, I can send money from my brokerage account to my Roth IRA on the 1st of January, because that's where I want my money to be able to trade. I want to build more and more money into my Roth, remember. My brokerage is the biggest at the moment, but I want to make the Roth the biggest so I can trade tax-free without worrying about all the other things I've just explained. On the 1st of January, I can send money, and now I've got a lot more money now. I've reduced margin. I can sell stocks or just use margin. I can send $7,500 to my Roth IRA from my brokerage account and earn instantly tax-free 3%. If I use my margin, which I would be doing unless I paid it all off, I would be paying 8% a year. However, I've just made 3%, so now that's 5%. In February, probably Robinhood's rate of margin will go down to 6%. But I've just made 3 by moving it to the Roth. So now I'm only out of pocket by 2%. But now I've got $7,500 to buy back Enphase when it dips in the new year due to tax harvesting, which it will. I can buy it back. So that's the final piece. So when I said at the beginning of this video, investing is easy if you understand a business by reading balance sheets and numbers, it is, but it's still complicated in how you exit the trades and how you actually make money. Because overall, there's a lot more to it. So that is what I've done this morning. I've improved my position, brought it into balance, realized a gain, but actually on paper made a loss. Saved myself a margin, still in the stock, got my seed money out, prepared now that I've got more margin available that I can move into my Roth on January the 1st. Gain 3% by doing that. Remember, you lose a 3% if you exit your Roth, so you don't. And why would I? I don't want to get out of the market. I can buy back Enphase if I want to, or the S&P or Amazon, which will all drop in the new year before it rallies again, at a discount with my 3% profit, with my reduced margin. Everyone's a winner. Do you agree with me? Do you understand? Does that make sense to everybody? Is that does that all make sense? If you would like to vote on my X account, this was the poll I ran this morning. Still running. It'll run for a week. Just sold 50% of Enphase, made 23% profit, got my seed money out. Now free shares, cleared $11,000 of margin at 8%. 37% say it's a good move. 12% say it's a bad move. 50% are undecided. Well, what do you think? Go and vote on that. I would like your thoughts and opinions. I know it was the right thing to do. I know my portfolio has benefited from it. But was it easy to do it? No, it was difficult. My mind told me it was the right thing to do. The calculations told me it was the right thing to do. But my heart was going, I don't want to sell it. That's the part of me I'm trying to get rid of. And bit by bit, I get rid of that. That is not what you want to trade on. Leave me your thoughts. Click above my head for the link to X. Look below in the description and find the link. Over here, see my reviews of all my stocks, how I learn about the real value of the stocks. And I've got another playlist here, my full playlist on, what is a stock, how it works, what dividends are, the full A to Z of investing. But there is a reason why my portfolio is consistently up. There's a reason why I consistently beat Warren Buffett. And I've shared with you this morning my philosophies on this particular trade. I hope that was of some interest and help to you. Until next time, as always, it's easy to make money on the stock market. The hard part is to keep it. Until next time, take care of yourselves and each other. All right. If you buy back, you have to wait 30 days. That's correct. That is correct. I've just realized my Christmas lights aren't on. Let me turn my Christmas lights on. There you go. Can't not have the Christmas lights on. Flippin' heck. I can't believe it. The Christmas lights weren't turned on. Look, I had all my Christmas lights turned off. That's better. Made a video without Christmas lights. Okay. Let's, we've got 15 minutes to go. Let me give everybody my link to the poll. There's my X poll. I'll give it to my Kicksters if you want to vote. Everything I've just been saying there. Let me give it to my Rumble audience. Everything I'm just saying there. There is profile. Let me give it to all of you underneath this video as well. You're watching there. There. Give it to LinkedIn as well. There you go. And Facebook. There you go. So there's my poll. Go and vote on it. Tell me what you think. Right, let's read some of the comments. Enphase Energy is going back down again. Let's see where it goes. Doesn't really matter. I own the company now. I can forget it. Buckaroony, I'm really glad that you enjoyed the video. Thank you very much. We've got another one coming up in a minute. Can you quickly bring up ASP? Oh, Tia will remind me again in a minute. I am. Hello. Hi, Martin. Queen of Self-Braiding. Here she is. Dawn Potterus. How are you, Dawn? Hi, all. Hi, everyone. Seed Money. Martini Racer. Hi, Jojo. Good morning, everyone. If you buy back in, you have to wait 30 full days too. I'm still educating myself on the whole tax thing. Thank you for conducting analysis on PSNY. No one covered it like you. Sincere Seals. Well, Sincere Seals, I can do a full review on any stock that you want. I will do that for you. You just got to become a member of my channel. I'll give you the link. It's only a couple of bucks if you want to be a bronze member. The perks do go up as you become silver and gold. And I can do a full review for you. There is the membership link. If you're on an iPhone, just make sure that you use a browser with the desktop version. Hey, Martin, if confident the stock will drop in January to buy back then, why would you not sell 100% now? Because it's risk management, Daniel. No, in fact, it's more than that. Let me be really clear. I really hoped I was clear in the video. I don't buy stock prices. I buy companies. I don't mind the ups and downs of it. If it goes below 101, which is my average, I'll buy more. I want to own the company. I don't care what people do, whether they push it up, take it down. I want to buy the company. And this is the reality of it. Enphase is going down now. It popped up. It's going down. But look at my portfolio. It's still going up. It's still going up. My overall portfolio is still going up. I own the business. I don't care of what happens on the day-to-day, the ins and the outs. I really don't care. And we've now broke another all-time high, 71,242. Add the $1,000 I've just taken out, which is for the gold mine, which will come back with profit soon. I'm actually at 72,242, despite the fact I've just trimmed off. So anyway, Martin, excellent strategy in which you've implemented for your portfolio. However, 80% of retailers manage their stocks like playing checkers. To make money, one has to play chess. Strategy. That is exactly it. That is exactly it, Tim. You've hit the nail right on the head. Excellent strategy in which you've implemented in your portfolio. However, 80% of retailers manage their stocks like playing checkers. To make money, one has to play chess. That is a great quote. That is a great quote. I'm going to say that. I'm going to say that. That is a great quote. I'm going to say that. If you don't mind, Tim Rogers, that is a great quote, and I am going to pinch it. There you go. I pinched it. I have started moving all my investments from Fidelity to Robinhood. Fidelity is a good platform for beginners in the market. I don't know. I'm not really that much fan of it. Good morning, Martin. Do you see the Kenvue jump 5% after hours last night due to the Tylenol? Did you see that Kenvue jump 5% after 5 hours last night? After hours last night due to Tylenol? Well, I didn't see that. No. You've just alerted me to that, so thank you very much indeed for that. It's no surprise at all to me. The talcum powder thing for J&J will go away. The Tylenol thing was always going to wait. It's why I kept buying it. I didn't see it, but thank you very much, Randy B. If you could send that into Discord, I'll make a video on that because that's a very important move this morning. But I'm very, very happy with that. Very happy with that. I've got 2, 4, 4, 6, 4, 6, 4, 8. I've got $4,800 in Kenvue, one way or the other. Yeah, that's really good. Yeah. Well, look at that. We got the discount here, so I actually got it for this price, and I doubled and doubled down here. So it doesn't show my overall return because it was a transfer from J&J. But I know I've actually made really good gains on that. And the dividend is excellent. It's just like, it's J&J principles all over it. J&J will go up as well on this as well today because J&J still own parts of Kenvue, I believe. Am I right on that? I think I am. I'd need to check, but I think I'm right. Anyway, another great day. Another very, very good day today. Beating the market, beating the S&P, beating Warren Buffett, all-time highs. Plus, I've taken 50% of my money out of end phase. So it's a good day. I've reduced my margin. I'm now paying $2 a day less in interest payment than I was paying before. And that is the right thing to do. I had bought 50 shares yesterday during normal market hours because it's a good start. Not expecting the dismissal to happen. Pretty cool. Randy B, so you were very lucky. That was a good move. That was a very good move for you. Yes, you want to really hold on to that, in my opinion, because it's got a long way to go. It's got a good dividend. It's increasing. It's got the J&J sort of stamp all over it. You bought it at a time when it was down because of the litigation around J&J and the uncertainty because of the split from J&J. I would say you should keep that, but that's not financial advice. But that's what I'm doing. But anyway, you did very well, and you bought it at the right time. There's no doubt about that. So you've got a built-in instant profit anyway. So yeah, they're very, very good. I don't know what your position is. You bought 50 shares. Okay. What you can do is, of course, you can take your seed money out now and you can just leave it. But depending on your allocation, the size of your portfolio, I'd be inclined just to keep it all, if I'm perfectly honest. But you wait for the dividends. You got good dividends coming on that. Did you know that? Randy B, did you know it pays a dividend stock? Because on Robinhood it doesn't acknowledge it. Did you know that? I made that mistake. On Robinhood, does it say it now? Let's have a look. Oh, it does now. It didn't before. Robinhood, when it first split, it didn't say a dividend. I guess that's to do with the legal rules or whatever it was when it transferred, but they do now. 1.91 is a really good dividend, and I'm sure it'll be a dividend king. I'm sure it'll have the same management and the investors as does J&J. So I did have 37 shares beforehand, so total of 87. I was thinking of trimming when it goes closer to 26, 27. I didn't realize. Exactly. Robinhood didn't specify. Let me show you what it is. You'll like this. Now you're going to keep it, right? You're going to go, oh, look at me. Look at me. I didn't realize. I have to be honest. I didn't realize. It's still not, what is it? I'll share it with you. We've got time, haven't we? KVUE. KVUE. No, it's not showing on my dividend software, but let me show you anyway, because I've actually been paid it. So I'll share with you what I've had so you know it's real, right? Dividend income. Dividend income from there you go. There you go. 20 cents per share. Now you're happy, aren't you? 20 cents per share. So let's do a little calculation. Let me do a little calculation. You'll like this. Not a lot. Right, you'll like this. Okay, here we go. This is for the benefit of one of my members, Randy B. So you've got, what do you say? 87 shares. 87 times 20. $17.40 every quarter. Every quarter times 4. $69.60 a year. Tax free if it's in your Roth IRA. Cool. Big happy. There you go. So you've got a stock near the bottom before the bounce. Solid defense company, which is what you want going into January when the tax losses come in and the dip before the real push goes up. You've got a business that's going to grow, no doubt about it. You've got $69.60 a year free if it's tax free, if it's in your Roth or your ISA, and you'll be making money, right? It's a stock you can keep. That's what I'm doing. Anyway, there it is on the screen for you. I'm not selling a single share of my defensive stocks. You always want to hold those. Here's Bill. We got Santa Claus Bill in the show. And shall we bring him on? Shall we bring Bill on? Here's Bill. There he is. This is Bill. See, this is our Bill, our retired war veteran from Canada. Here he is live in the show. And he's been giving people memberships and supporting the channel. Here he is. There's Santa Claus Bill. Thank you, Bill. Lovely to see you, mate. Martin, I just had an email from Robinhood today saying I'm almost off the waiting list. Hey, very good. Very good. Very, very good, Martin. I'm excited for you. Hi, sorry, I'm late, Paul Knowles. Yeah, did you bring a note? Cool, big happy. Morning, Paul. John Granfords. Good morning. Good morning, John. Got a message from you earlier on the chat. Thanks for that, mate. Was hoping it was a good pick. Sidhu, still falling. Right. 3 minutes to go. So, make sure that you do watch my video this morning. Look at that. I explained this morning, I did a 15-minute video why I sold my end phase. There it is. There it is. I explained it, and even though it's going down, my portfolio has broken records again today. 71, which is 72 because of the Roth, because of the gold money that's out at the moment. There you go. Fantastic day. Perfect. Make sure that you watch that video later on. The psychology of investing. It's very, very important. It's more important than anything. More important than anything. It's the most important thing. Psychology of investing is everything. And I've just laid out my strategy there for you. Anyway, Martin's crystal ball worked again. It's like, all right, here it goes. I know you want to see it. It's Christmas, isn't it? Oh, I accelerate. I added it on there. That was the 12-inch version. That's the remixed. That's the double remix. Crystal ball prediction this morning. I did a video. You want to go and check it out. The psychology of investing. I sold Enphase, explained exactly why I did it with the tax loss, the benefit on paper, losing money, in reality, making money, getting my seed money out before the drop. Explained exactly why, studying the balance sheet, learning how it all works. Now I can take more margin. I've reduced my margin and put it into Roth IRA on January the 1st, earn 3% from doing that, and then Robinhood will drop the blah blah blah. What's it called? Margin down to 6 in February if and when we get the rate the rates to drop. This was going to go out as a video. It's not now. It's rubbish. But anyway, forget it. In fact, forget the whole thing. Martyn's losing his mind. He's trying to make a video and he can't do it. So there we go. Let's get out of it. Let's ring the bell. That's rubbish. Use the real crystal ball for that, Bill. I know. It's on the shelf, Bill. I can't bet it on the camera. It doesn't work. Will Martyn's brokerage surpass 100 grand by the end of the year? It could do, yeah. It very much well could do. Right, here we go. Said a chicky 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 pow pow. Said a chicky 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 pow pow. With the real Satoshi. Stand up, say please stand up, say please stand up. With the real Satoshi. Stand up, Nakamoto. Booyah! I love it. Let's get ready. The bell's at hand. The bells at hand. See, now I don't mind if, basically now, if Enphase goes up, right? If Enphase goes up, I'm happy. If it goes down, I'm happy. Doesn't really matter. Are you ready? Let's go. The bell has now gone. The bells of somewhere or another. The bells of Notre Dame. Right, here we go. And how is the portfolio doing? Enphase Energy just dropped. Does it bother me? Nope. The portfolio is still going up. There you go. And there you go. 71,000, which is 72,000 because of the gold investment. I'm loving it. I'm loving it. Let's see what's going up and what's going down. There we go. The overall portfolio is pounding ahead again today. The Virgin Galactic, I'm holding it to $100. There it goes again today. Up 1.42. Palantir going up. Too expensive. Gold, it's going to be 40% up next year. You mark my words. The S&P is going up. I'm waiting. Amazon is going up. I'm not buying it. Apple, I'm waiting. Next year Energy just trimming off. Enphase Energy coming straight back down again. There it is. It's going down, but hang on a minute. If it's going down, why is your portfolio still going up? It's the biggest part of your portfolio because I trimmed off. That's why. I explained it in a whole video. You don't want to miss that video. You really, really don't want to miss that video. The psychology of investing and the complexities of it as well. Coca-Cola going up. I love it when I'm right because I'm not always right. I know I'm right most of the time, but I'm not right all the time. So when I'm right, I enjoy it. Right, Jay at Kenview, just trimming back a little bit. Chevron, we're going to wait just before we sell that. Tesla's going up. Rivian is going up. McDonald's, you can't overbuy land. Can't overbuy land. There it is. Google going up. Too expensive. Microsoft, my portfolio is piling ahead now. We're up nearly $1,000. Oh, it's gone through $1,000. What's going on? What's going on? It's very, very exciting. We're now at 71, which will be 72 with the gold, 72.5 all-time highs again. Brilliant. How is this happening? How is this possible? Because Enphase went back down again. I don't know what's going on. Is it? What is it? What is it? It's Virgin Galactic, of course. It's oversold. It's undervalued. At least it was. And now we've got more institutions piling in. I think Vanguard yesterday increased their allocation. Thank you very much indeed. I forgot what I'm saying. I'm a bit excited this morning, to be honest. It's caught me in. I'm just enjoying it. Can I just sit back and enjoy the show just for a minute? This is brilliant, isn't it? Let's look at our Bitcoin this morning. Let's see what's happening to that. Let's see what's happening. Funware, Faraday, Rio Tinto, Bitcoin, Polygon, XRP. Crypto's going back down now. We said Bitcoin's going back to 15,000. That's where I own it. Right. Oh, boy. This is good. Virgin Galactic now. Are we $3 today? I've not sold a single share of Virgin Galactic. We're at 60% up now. Let's have a look on the week. That's the number, 265. 265 is the week high. Are we going to push through 265? We're doing very, very well indeed. That's where we want to go. Look at this cup and handle. If you are a chart reader, which I'm kind of not really, don't believe in that. There's value in it, but it's not really my thing. It's exciting. Now then, we need to get busy. You guys are lazy this morning. Lazy as you are. We've got 87 of you tuned in. We had 100 a second ago. And remember what I've said, 45% of you are not signed to Google because Google trip you up. They say you need a channel. It just means you need an account. You don't have to be a YouTuber, all right? So come on, we should have 44 likes. Let's smash the like button. If you smash the like button, it will share it out to more people. It helps the channel. If you like my content, it will recommend my content so you won't miss the breaking news. However, if you don't like my content, and I don't mind if you don't, I don't care whether you like me or not. It doesn't matter to me. I probably don't like you. It's perfectly fine. Not everyone likes everyone. Otherwise, the world wouldn't work, would it? So smash the down like button if you don't like the channel. YouTube will no longer share with you my content. That's how it works. Let's refresh it. That should be 44. 5, 4, 3, 2, 1. And make it... Oh, 49. It's way more than I deserve. 49. I'm loving it. Thank you very much indeed, Lucas AIDS. I really appreciate that. All the family. I'm loving it, loving it, loving it. All right, we've got more reviews. Alpha Spread removed the trap from Fisker. Alpha Spread removed the trap from Fisker. Virgin Galactic, it's up again today. This is absolutely fan-flipping-tastic. All right, let me update that just a moment. Bear with me. Just bear with me. We've got another review to do this morning. Our first review will be for Pat, coming up in a minute. Breakfast bar this morning. This is Mike. I'm loving it. Snoopy. Oh, Leah will love this. Leah will love the Snoopy. She loves Snoopy. She loves Snoopy. She'll love that. I'll tell Leah. And there, you're the best winner of the best trophy. There is Mike. What have we got? Stock news I shared with you. Tylenol. I want that. I want that. We'll do that in a moment. That's big news, Randy B. And now where was it? Welcome all. One of you sent in, it should be in either links for YouTube or stock news. Links for YouTube is best. Jordan Allen, Vanguard. There we go. That's what I want. Increase space holder from 29% by 29%. There we go. That's what I want. Virgin Galactic, 309 institutions, shells of yada yada yada. Let me, I don't want that. No. Oh, get out of it. There's constant adverts. I give all my stuff for free and everyone's, drives me up the bloody wall. Why is everyone like this these days? What is wrong with everybody? Ruin all the content. Ruin all the content. How can I control shift? Do I need that? I'll do it like this. I'll do it like this. If you're going to play silly buggers, constantly trying to get everyone to buy everything all the time, give people value. That's all you got to do. It's not hard. Everyone's just trying to sell stuff. Can I put that up there? Yes, I can. There you go. That's how you get around it. That's how you get around it. Okay, that's not the best quality picture, but it doesn't matter. Take that information there. Put that there. Okay. Okay. Right. There you go. Right. Robinhood's on the move. Whoa. We are going up now. So, after this, we got a review to do. Robinhood, stop doing this. Don't like this new feature you've got here. There we go. Okay. Here we go. So what's the time? 1 hour and 9. 109 SPCE. All right. We can talk about Farfetch. If you want me to do another review on it, I can. Just become a member of the channel and I'll do it for you. Right. I do a full review for all my members. Okay, here we go. This is an update video. Breaking news here on Martyn Lucas Investor, Virgin Galactic. Let's give you a quick update with what's going on. In this video, I'm going to tell you why the stock price has gone up this morning. What's my strategy? How am I selling? Who am I talking to? What's going on? And all the rest of it. Are you ready for an update with Virgin Galactic? If you are new here, click subscribe and ring the bell. And a very, very important video I've just recorded during the live show. I'll put it out and I'll give you the link to it in a minute. The psychology of investing and why I reduced one of my positions today by 50%. And despite everyone saying it's going to keep going up to the moon and using all these silly phrases, and I'll explain why, and you'll see why my portfolio is consistently beating the market, consistently beating Warren Buffett, and in fact, we're over 30% now in just 1 month, and margin is being reduced all the time. And there's a reason for that, and we're coming up to tax season as well. Anyway, what you want to know is why Virgin Galactic is moving. Well, there's a very good reason. And can you see below me, as we zoom closer, there's a little chart. It's about there. Can you see that chart there? That little chart there, that green chart there, as it comes into focus, is your answer. Down there. What is it? I'll show you in a second. Before I do, though, I will share with you my full allocation. Have I sold any Virgin Galactic yet? The answer is no, I haven't, despite those on Reddit and StockTwits saying he has, because they don't read and watch the videos. They read the thumbnails like comics. They're like children who just look at pictures and don't watch the whole video. I've actually got the same amount of shares as I've had the entire time. Not sold a single share. I also haven't bought a single share either. I'm up 64%. Why is Virgin Galactic moving today? Well, there's a very good reason for it. Vanguard, one of the institutional investors, has increased their space holdings today, which was yesterday, by 29% from 20 million to more than 30 million. This was that little graph I was showing you a few moments ago. This is institutional investors' ownership. Can you see how it's dramatically just gone up? It's you could regard that as an S-curve if you talk about a chart, sort of S-curving and flattening out. That is one hell of a jump. One hell of a jump. It's one of the most bullish signs in Virgin Galactic. Well, what does that mean for the stock? It means the short squeeze has already begun. It started last week. All we need now is volume. And today, the volume is on it. We're now getting enough volume. So, Virgin Galactic now could very, very easily wake up tomorrow and find we're all at $10. Should I buy more? Absolutely not. It's the right allocation for my portfolio. I'm holding it to $100. Institutions are buying it. It's no surprise. If you have done your research, if you understood why you bought it in the first place and not listened to clowns in their bedrooms and people like the Wolf of Dubai who want to sell you training programs, you knew that this was a good investment. However, very, very important to point out this morning, and I want to share this with you. It's important. The psychology of investing is everything. My portfolio is up today 3%. In fact, I'm over on the month now, 28.76. It was 30%. It'll be at 30% in the next few minutes, actually. My overall balance has increased again. I started with $5,000. It's at 72 plus the 1,000 I've just taken out for our gold mine, which is now being transferred onto a convertible note. When it comes back, it's going to be worth more like 3,000 or 4,000. So actually, I'm getting near a good 80,000 by as soon as that comes back in again. It'll be around about 80 grand. But anyway, so that's why I'm at 71,993. And what was interesting was this morning, contrary to most people's understanding, I sold Enphase. And I sold 50% of it. I'm still in, and I explained why. And even though it's going up now, you might go, but aren't you feeling bad that you sold it? No, and I explain in full detail exactly why. If you click above my head, and I'll give you the link at the end of the video, click above my head here and down here, I will send you to the video of the psychology of investing and why I did it. It's a whole complexity of it with tax harvesting, trimming down margin, bringing the portfolio into balance, getting my seed money out, still being in the stock. Now I'm able to move that margin position into Roth IRA and earn 3% and trade it there on the dip in January. It's a very complex situation, but you can get the information if you want to. Anyway, Virgin Galactic. So what do I think? Where's Virgin Galactic going? Just to finish off this video. As I've said before, it's a $10 stock. We are still talking to the agent of Richard Branson to have him on the show. We are moving forward. There's a petition coming out soon. Everyone's going to sign. I hope, in fact, I know you will. So I'm very much looking forward to you all signing that. I forgot what I was going to say. Yes. Some of you doubted me and said, you'll never get Richard Branson on the show. Well, in case you've not been following my live shows, we interviewed our first CEO live from the floor of the stock exchange. That was Jeff Boots of a gold mine just a week or so ago. And I spoke to the manager of the floor of the New York Stock Exchange. And now I'm able to interview all of the CEOs on the New York Stock Exchange. So we've extended our invitation to Elon Musk and others. And we're going to speak to all of the CEOs on the New York Stock Exchange. So Richard Branson is mere small fry now. Anyway, fantastic stuff. I'll keep you updated with all of that. Virgin Galactic is looking very strong. There will be some trim offs. There will be some sellouts. But at the end of the day, I'm keeping it up to $100. If I do decide to trim, because I can, it's my money, it's my portfolio, there'll always be a good reason, not just because I'm taking profit, because I want to do a move for other reasons, always 5 moves ahead. Like someone here said this morning, Excellent strategy in which you have implemented for your portfolio. However, 80% of retailers manage their stocks like playing checkers. To make money, one has to play chess. Exactly right, and I'm using that phrase. It's a very, very good phrase. I like that. So if I do decide, I will post it on my X. My X account is above my head. Down here, you'll find all the links to all the videos and blah, blah, blah. And over here, I'll put the video of psychology of investing and why I sold my end phase this morning. Even though it's going up, I'm happy. I explain why. Down here as well, other videos in the Virgin Galactic series. Until then, as always, take care of yourselves and each other. Alrighty. Let me clear that out. All right. How many likes have we got now? We've got 100 people watching and we are 60 likes. Excellent stuff. Right. Time for a review. Robinhood on the move. Let's have a little look. Yes. Yes. Farfetch. I've done a full review on Farfetch. Here is the review. If you go on the homepage, look at the playlist, scroll down. There is Farfetch. I can do another review and discuss it for you. There is the video. I'll give you the link to the playlist. Go and take a look at my review. If you want to, I can do it again for you as well if you want me to, if you become a member. There is the review. How's space doing? There you go. Thanks to all you lot. I'm currently up 22% in the last 90 days. Would you sell your stake money in space if it goes to 10? That's a very good point. Only if I felt that, because I know it's going to continue going up to $100. If I felt that there was something worth buying and I wanted to trim my margin is trimmed enough now. 41,000 is fine. I've taken it from 52 to 41. I've relieved $11,000 this morning. I want to remain in the market. There's nothing wrong with using margin at 8% when you're making 30% a month. I mean it's 8% a year, but you have to manage it. Virgin Galactic, this is awesome. Tax harvesting, there it is. Martin, I must be ready for fuel cell energy by now before it bankrupts me. Martin, I must be ready for fuel cell energy by now before it bankrupts me. All right. Okay. There's the portfolio. All-time records. Once again. $72.5. $73.5 if you add the gold. So actually, by the time I bring the gold back, my portfolio will be $80,000. So now we are on for a $100,000 portfolio. Yeah, we are. We could be at 100,000. We could be at 80,000 today. We could be at $80,000 today. Right. Pat M, are you here? Pat M, are you here? It's time for another review. Are you here? Well, you saw what I did. I just trimmed my end phase. I'm very, very pleased that you're happy. If you want to celebrate or do a comment on the screen, you can do a super chat and it will read out your comment. Right, let me have a look now. Do I want to trim any more? Do I want to trim any more? Amazon finally selling. Yes, yes, yes. The profit taking is coming. Come on, give me 20% and I'll buy you. I will use the money from Enphase to buy you. Go on. Apple, NEE, Enphase. There we go. I can own the company now. I can own the company and forget. I don't ever need to worry about Enphase now. See, that's the point. My portfolio is balanced. I've made my seed money from it. This is all free money now. It's going up. It's a 3x. I can forget all about it. Never need to sell it. Don't need to worry about it at all. Coca-Cola, J&J, Kenvue, Chevron, Tesla. It's really good. Yeah. Pat M, are you here? Julian Torres. Oh no, Pat, where art thou? Pat M, are you here? Pat, doesn't matter if she's not here. I'll still do it anyway. Check out the breakfast bar. Hey, great. He's got his Virgin Galactic mug. This is an awesome picture as well. This is MSK. I've now got enough now to do the new pictures. So let me do that. Save image as MSK dot JPEG. There we go. Stick it up there. Boom, boom, boom. Boom, de boom, de boom. Lovely, lovely, lovely. Excellent stuff. Excellent. There you go. Great pick. Thanks a lot. I can now update this screen. I want to update this screen here. I want to update this. Which screen is it? This one here. I'm going to update this screen here. See all these faces? We've got enough now to do that. So I'm excited about it. All right, I will do that. Thank you ever so much, mate. Yes, Henrik, I knew about the cutting of the workforce. Enphase sent that in. I'll use that as well because that's partly why I did it. Now that is a positive and a negative. We saw what happened to Meta when they reduced costs, and Google and others. We know, and Amazon, but it can take a bounce, then a pop, and then a drop. But it's good overall. But also it shows you how they're preparing for next year, which is why I wanted to stay in, but I also wanted to trim it as well. Good channel. Greetings from Mexico. Welcome to you. Even perma bears, including the big banks, are now becoming bullish on rate cuts. Indeed, they are. Thank you, Henrik. I've got that. Right. We're going to do a review. We're going to get through our list. Okay. This is for Pat M. The one that you can jump to the top if you are here. You can do a super chat and go to the top. But right now, though, it's time to do Network Perry. Okay. Let's have a look at another new stock. Oh, Person Network. Person. That's not a real name. Is it Perry? P-E-R-I. It's not the right name. She's given me the wrong name. Person Person Network, Perry. There's no Canadian Imperial Bank. I'm trying to find. If she's not here, I'll have to move on. It's her one, but I can't find Perry, the one she's talking about. P-E-R-I. Oh, Perion Network. Oh, Perion, not I got it wrong. There we go. A Perion Network. There it is. There it is. I'm going to do it anyway because she gave me a super chat to do it. Perion. There it is. Okay. Perion. Let's have a look. Is it MODG next? No, next. Next is Patrick Moritz, if he's here, but because he's given, I'm not sure which one he means. Omer, if he's here, because I'm not sure I know what it means. Paul Knowles will be Nokia. I certainly know what Nokia is. So Nokia is next. Then Paul Knowles has got Sidhu, and Paul Knowles has got Fuel Cell Energy. Paul Knowles has got a few here. Anyway, Chris C. Chris C is Moog, Galloway Golf. It can be next if you do a super chat. Yes, it could be right after this. Let's try and do two. In fact, let's do two reviews this morning. So whoever gives me a super chat next will be straight after this. We'll do two back to back reviews this morning. So Perion, there we go. Let me bring this into focus. There we go. Portfolio is taking care of itself. We've done our trimmings. We don't need to do any more. Portfolio is in balance. We can hold end phase, let it run forever. We've still got a big position in it. We don't need to worry about that at all. Here comes the trimming. Bound to be some trimming at these prices. That's perfectly healthy. Nothing wrong with that. So let's bring up Perion. Perion Network. It's interesting. For every digital dollar. Okay. Paul Knowles. Scrap all others. Fuel cell. All right. Scrap all the others. Just fuel cell. Okay. The list has just got shorter. I can't scrap Sidhu because John Granforth wants it. So I'm not going to delete that one. He'd already asked that to go on the list. So I will make it just John Granforth then. Okay. Okay, there we go. Harry S., you have to be a member for me to do a review for you. It's up to an hour-long video and research and so on, and I make the video, post it, and so on. You have to be a member, and if you want it done straight away, you can by doing a super chat and taking it to the top. Right, so there we go. Let me bring up the backtest software and put $10,000 in the S&P, 100%, and then we're going to put Perion Network, 100%. Analyze that. Analyze it. All right, I've analyzed it. All right, I've got that. Let me prepare this a minute. Have we got any new, very little information from that point of view. Oh my gosh. All right. All right, all right, all right. Don't these people with these ads? I provide it all for free. Build an audience. Not trying to sell every bloody thing for rubbish. Okay. That's useful information. That's credible. I can use that. Right. Got to be very selective what you use. Right. That's good. All right. Thanks, Martin. You're welcome. Yeah. didn't want to delete yours. It was linked to Paul Knowles, and you go, well, hang on a minute. What about me? Exactly. Hi, Martin. What's your price prediction from Virgin Galactic for the day? I don't know what the stock price is going to do today. It should go up because it has, because institutions have massively increased their allocation. It could easily be at $4. I don't know. Don't really care. I know it's going to $10 in the next few weeks, month maybe. Anyway, and ultimately $100. Chris C, Moog, Topgolf Callaway Brands review will be great. All right, Chris C will be next, unless anyone does more than $5, but he will still be at the top of the list. You don't lose your position just because you do a super chat and someone outbids you. You still remain in your position. So anyway, let's have a look. Chris C. Take that out of there. Cut. Take you to the top. Okay.
Hey Martin, Mod, Topgolf Callaway Brands review would be greatly appreciated. Smiley face.
You're welcome. So, an hour and 35. My eyes are stinging this morning. I don't know why. Right. Could you do a review, Ty Redman, are you a member? Yes. Of Ellington Residual Mortgage? Yes, I can. I shall put that at the bottom of the list. Ty Redman. See, yep, Ty Redman. Let me put that out there. Ty Redman. There you go. That's on the list. Thank you for the super chat. So you're thinking Amazon 125 is what you're looking. Yeah. Oh, it's moving. Can you explain this, mate? Just sold 30 yen phase. My average was 92. My average on remaining 35. I have is now 77. I did buy a lot below, but first lot I bought was 97. Can you explain this? I just sold 30 end phase. My average was 92. My average on remaining 35 I have is now 77. I did buy a lot below that, but first lot I bought was 97. Buckaroonie, I'm not sure I understand your question. When you need to write down your own trades and look back in your history. When you sell a stock, your average doesn't change. Only when you buy does it change. So it can be very misleading, if that's what you mean. If you buy a stock, and that changes your average. Whether you buy up or down, it changes your average. If you sell, your average doesn't change. You need to understand what your averages are. And the way I do it is I look back at my history. Let's say I buy 10 shares at $100 and then another 10 shares at $50. My average is 75, right? I look back in my history and know that my oldest shares were at 100. So if I sell 10 shares, I know I'm selling the 10 shares at 100. You need to do your own sort of bit of calculations and work it out. The average isn't accurate. It's only what you buy, not what you sell. So if you sell, your average doesn't improve because you've got rid of the dearer stocks. It doesn't do that. So you need to be mindful of that. If you're not mindful of that, you would miss out. Anyway, first buy, first sold. Yes, it's called FIFO rule. First in, first out. All right, review time. Pat, are you here? Pat M. She's watching, but she's muted. Are you here? Are you here, Pat? Okay, review time. Yes, got it. Awesome. There you go. You're very welcome. I love it. Good job, this, isn't it? Right. We'll go members only now because we're making a video. So if members want to comment, they can, because it's part of the video. That's why I'm here, guys. Learning every day. Oh, yes. That's what it's all about, isn't it? Right. Stock review time. Time for another stock review. This one is ticker symbol PERI, Perion Network. In this video, we're going to cover in great detail the balance sheet. We're going to show you the insiders who are buying the stock, who's selling the stock, the balance sheet, the revenue, the margins. I'm going to give you a profitability score. Going to share you the sentiment of the stock. I'm going to give you a solvency score. Is the business likely to go bankrupt? What's the growth rate? I'm also going to share with you the breaking news around the stock, what's happening with the company. Also going to look at the latest investor news and the website to get more of an in-depth look into the company. These reviews all make their way on the best, most advanced algorithmic software in the world. It also accompanies Meet the CEO series. So if you are from Perion Network, I invite you to come onto my show and do an interview with me. I'm doing Meet the CEO. I'm meeting all the CEOs on the New York Stock Exchange one by one, and I'd love your thoughts on your company and share your story to the world. So these reviews are the most honest, most reliable, trusted source of financial information because I'm not paid, sponsored to provide it. The information is based upon AI algorithmic software, which is the most advanced software on planet Earth. It's not biased. It's not in any way shaped by anybody else. It does allow you the information to make an informed decision whether you should buy, sell, or hold a stock. And to give full accountability, my portfolio is consistently up. I'm consistently beating the market, consistently beating Warren Buffett by miles. It's actually quite easy. It's very, very easy to make money. The hard part is to keep it. I never use options. I never short the market, but I'm always making money. It's very, very easy to make money. The hard part is to keep it. So let's get straight into our review. If you are a member, you can have a full review. It's a free service I provide my members. And there you go. Tap the like button if you like this video. And if you become a member, the links are below in the description. You can become a member and ask me to do the same for you. Make an interview with the CEO, put the video out, do the whole thing. But always do your own research. I'm not a financial advisor. However, I've had great success investing because I buy companies, not share prices, and I study the stocks and I study the business and the balance sheet and the numbers. And then I get to know the people behind the businesses with Meet the CEO, so I understand exactly what I'm buying. So without further ado, let's get straight in and look at this one. So we're looking at Peri. What is it? Perion Network. Well, we can see here from the chart that it opened all the way up at $65, dropped down and flew back up and back down. It's got a very violent, very aggressive chart, a bar chart, a very basic line chart, but we'll come into much more detail in a moment. But what is Perion Network? It's a global technology company which engages in the provision of advertising solutions for brands, agencies, and publishers. It operates with the following geographical segments: North America, mainly US, Europe, and others. Let's open up some more information. The firm solutions include publisher platform, search monetization, sort cookieless targeting. Interesting. High impact, creative, and actionable monitoring. The company was founded by Ofer Adler and Yaron Adler in November 1999. So it's been around for 24 years and it's headquartered in Israel. Interesting with what's going on there right now. The listed name for Peri is Perion Network. Okay, now then. This is my first look at the stock. This sounds a bit like potentially Google, potentially. Maybe I'm wrong. It's why I'd like to speak to the owner of the company and learn more about it. I like buying companies I understand. I like buying companies where I talk to the CEO. I like to build a relationship with the business. I like good balance sheets. We'll come on to all that. But I also like proprietary, unique companies. There's only one Tesla. There's only one Google. There's only one Virgin Galactic. There's only one Apple. So I don't want to buy companies that aren't standalone at the best in their field. Anyway, we'll learn more as we go into the company website later on. If you bought this on margin, I currently use margin. I'm in margin 8% right now. It's regarded as medium risk. 45%, in fact, is your maintenance requirement. 25 is the lowest. 100 is the maximum. What that means is if you buy it on margin and it was the only stock that you were buying, because if you buy lots of stocks on margin, it all gets a little bit confusing, a little bit complicated. But if you're only buying one, you need to have 45% funds available to be able to cover the requirement, because if the price of the stock dropped, you do have to have a certain amount in there to cover your allocation. So the higher that is, the more risk it is. It doesn't mean you're going to get a margin call, but it gives you the indication of the volatility of the stock. Anyway, it's a 1.47 billion market cap, so it's a small company relatively. High today, it's bigger than me, but not as big as Google. High today, 31.56, 52-week high, 42.75. Price to earnings ratio, $12.54. So clearly it makes money. Price to the earnings ratio, that's the price you're paying for the stock today. Remember, the valuation is just the price of the stock today. That's not the valuation of the company. I will give you the real valuation in a few moments. But right now, that's the price to earnings ratio. You need to compare that to other companies in the same sector. It means nothing comparing it to Tesla and going, hey, well, Tesla's 70, so this must be cheap. It doesn't work that way. Every market, every sector is different. You need to compare it to the sector, so make sure that you do that. Low today is 30.84, 52-week low, 24.10. No dividend. It's purely a growth stock. That means the stock is an investor. You make money on the price going up. There's no comfort zone. There's no dividend. However, dividend isn't free money. It's money that they would pay out in growth. They've just taken from the profits to pay the investors. So understand that, what the difference is. And I've got more information on that later on in the video. Anyway, average volume, 486,000. It's low volume. And today it's 65,000, which looks potentially lower than average at 19 minutes past 9 Central Time. That looks below average today. You want a stock with high volumes. That way you can get out of the stock if you want to. If it's low volume, you might want to sell, but no one's buying, and you might have to reduce the price before you can sell and exit your position. Anyway, let's move on down. I've got some news. We're going to cover the news shortly, not this part of the video. That comes up later. The Morningstar analysts, I don't like them. It's very biased. They're paid to do this. I'm going to give you a much more open, fair review in a moment. But they're saying it's a strong buy. However, you've got to realize when this was done, it's not done regularly, and you can easily make a mistake if you just use a very simplistic valuation here. They're saying buy 66%. No one's saying sell. Okay, great. As you can see, Wall Street are rubbish at analyzing stocks. They're paid to do it, and they're rubbish at it. They don't know how to value Tesla for the future because they can't quantify what they don't know. They are traders. They are not people who buy businesses. They buy today and sell tomorrow. They're always looking for the movement of the stock, not the real value. So I have never really found a really credible, reliable analyst a review from Wall Street, to be honest. You can see that they've missed the expectations by quite a margin. The good news is they got it wrong from the point of view they undervalued the stock, which means it then beat on earnings. Remember, the company don't give an estimate. Well, they do, but these estimates on here, what the expectations are done by Wall Street. They expected it to be lower, and it was consistently up, and they've not seemed to learn from their mistakes. They're still getting it wrong, and the stock then beats. Now, because the stock beats on earnings, as opposed to what Wall Street suggested it would do, doesn't mean to say the stock goes up. Sometimes the stock, we could beat on earnings and the price go down because it's the guidance of what the company are saying going forward, and so on and so forth. But anyway, it's good to see they're beating earnings. It's one part of the puzzle, but not all of it. And they are making money, and they are generally trending upwards, so that looks pretty good. If we look back at the chart, though, if we see here, 2020, a COVID play, I always look at the COVID plays and see how they reacted during COVID. As we see March 2020, not much. It did then rally at the end of the year. I don't necessarily would say that as a COVID play. I do look at that because I don't buy any stocks. I have very strict rules of how I buy stocks. They've got to tick all the boxes before I touch them. Proprietary, unique, good balance sheet, good CEO, good management, blah, blah, blah. Stocks I'm interested in, business I'm interested in. And one of those things is not a macro condition influence stock. I don't want to buy anything that popped on COVID and then dumped afterwards, because then you're relying on a macro condition to drive the stock price and that or the business, and that doesn't interest me. That is gambling, that is day-to-day trading, and that doesn't get me excited. Okay, now then, clearly, SoFi, if we're talking this sector, this tells me the companies that other investors are buying, the investors of Peri are also buying. Okay, so it gives me an idea of how the stock will trade. It gives me a sentiment of who's buying it, and it'll give me an indication of where the stock's likely to go on a day-to-day basis. Even though I'm not interested in that, I'm buying the business. It will tell me how the stock will trade, and it can tell me that stock's going to go down a lot before it's going to go up, and it's worth knowing, right? SoFi Technologies, don't buy it. I like what the business is doing. However, the CEO talks rubbish. He doesn't understand the markets at all. He said that we would get rate cuts all last of year, and he was the only one who said it. He was trying to get attention to his stock. It worked. He had some volatility. He made clown. I can't talk to anybody who is a CEO of a company. It's a money business as well, SoFi, and doesn't understand how the market works and how the Fed works. So clear. I mean, don't forget, anyone can become a CEO. You don't have to pass an exam to be good at anything. Anyone can be a CEO. I could be a CEO of my own company tomorrow. Doesn't mean I'm good at it. And he's not good at it. He doesn't have a clue. So we got a very volatile stock here. CrowdStrike, I must be honest, I don't know a great deal about that one. C3AI, this one, I made a lot of money from this one. This got massively overbought. Everyone jumped on in because it's AI and hey, let's all buy it. I made a lot of money from this one. I got out of it. It's too expensive. It's very volatile. It draws the wrong type of investor. AMD, the same thing. AMD all over the place. Whatever. Taiwan Semiconductor, I do like it. I prefer On Semiconductors. I think it's a better run company. Trade Desk, I haven't done a review on it. I don't know. So it's got a bit of volatility there from the point of view of who's buying the stock. Okay, and as we can see, it's extremely volatile anyway. I would want to know if I was buying this company, which I won't be, straight off the bat, this is not for me. What happened here and then what happened here? So do the research on the news, and you can find that out from the investor pages of the website. And talking of the website, let's go and have a look and learn a bit more about the business. Let's scroll down. For every digital dollar, a business solution. Perion is well positioned to capitalize on shifting digital advertising. Okay, let's have a look. Capture and convince. Right, well, digital advertising, and you've got to judge by every piece of information that you find. You've got to judge this. It's important. They are about digital advertising, and yet, whoever's in charge of their website isn't very good at it. And that's important. That's important. You expect excellence. I expect my portfolio to outperform the market and beat Warren Buffett, which it always does. So I expect excellence. I don't expect mediocrity. And whoever designed this website isn't doing a good job. They've used white text over a white background. Now you might go, that's not important. It is important. It is important because it shows you the management of the company. It shows you how the company are operating. That is ridiculous. A child would know better than that. Anyway, that's not good. But anyway, every brand, you can't even read it. You've got white text going over a white background. So I can't even read what they're actually saying there. Anyway, technology solutions for the most complex brand needs. Perion is focused on the future and has built a tech stack that drives our capture and convince business solutions. Our AI and machine learning can be applied to sourcing and optimizing traffic, transforming dumb funnels into smart consumer journeys. Okay, well, a dumb journey would be to basically not use white text over a white background and sort that out because, That's not very clever. Anyway, whatever. Now, just want to be full disclosure. I am in dark mode. So there is that. However, a lot of people use dark mode. Before I completely say their website is trash, I need to say a lot of people use dark mode. So it's the understanding of the technology that people use. Maybe if I'm not in dark mode, this might work better. However, I am in dark mode, and many people are, and you do need to have an optimized website before anyone goes, I've just looked at it and it's fine. But anyway, I'm just making that point before anyone says, well, just because you're in dark mode makes a difference. Expect excellence. You want my money? I expect excellent management. So far, that's not demonstrated in the design of your website. And in fact, this website looks like it was made on a very basic editing software. And I know because I build my own website. Let's look at some latest news. This is how they talk to their investors. I have to say, I'm not impressed by the website at all. Let me look at their news, though. This is what they've just posted as their latest news. So let me have a look into this. AdTech, before we go on to the numbers, AdTech company, Perion Network, acquiring Hivestack for $100 million. We want to expand, and we are continuing to talk with other companies. We expect that will complete another purchase in 2024, said the CEO, Tal Jacobson. Israel company Perion Network has announced the acquisition of Hivestack for $100 million in cash. Perion could pay up to an additional $25 million in cash and equity, structured as a 3-year employee retention and performance payment plan. Okay. Hivestack, headquartered in Montreal, Canada, employs 154 people, and it has developed a digital out-of-home DOOH advertising platform which aims to transform ordinary public spaces into dynamic experiences, engaging audiences with eye-catching, personalized content in real time. Hivestack platform is used by many of the world's largest brands, agencies, media owners, partners, including Uber, Colgate, Lego, Intercontinental Hotel Group, DoorDash, Group M, Dentsu, the Trade Desk. That's interesting because Trade Desk was in those stocks. So people buy what they know. Very important to understand that. People buy what they know, not necessarily because it's good. We are excited about the acquisition of Hivestack with both companies and have advances our long-term growth strategy. Hivestack DOOH technology platform stands out by offering brands and advertisers what they crave: the most high visibility, creative, precise targeting, immediate impact, wide reach measurement, said Tal Jacobson, the CEO of Perion. In addition to advertising our diversification strategy, the transaction aligns with our objective to expand our technological capabilities and product offerings, and will continue to pursue additional organic growth opportunities. So we're in the advertising business, but I really strongly suggest that you look at your own website if you're going to advertise for me. Anyway, that's being said, let's now look at the numbers. Does this business actually make any sense? Is it a good business to buy? So far, it's not for me. The standard isn't where I want it. I wouldn't put my money into this as of now. Right? Let's go into. As you can see, my portfolio is still rising, consistently going up again today. Let me just have a quick look at it. Yep, looking great. Breaking more all-time highs. So very, very good. Very, very happy. Now we look at the intrinsic value. Some people use this and it tells them whether they're going to buy or not. You really shouldn't just use the intrinsic value. However, my intrinsic value is far more reliable than what most analysts will use, because I'm not paid or sponsored or leaning towards. This is purely running the numbers through a very advanced algorithmic software without any bias at all placed upon it. It's more honest. But anyway, I will spend 25% overvaluation on a high growth stock. I've said that before. So at the base case scenario, we're undervalued by 13%. Sounds good. But beware, there might be a warning in a moment which will tell you that it's a valuation trap. Many people don't read that. They look at the headline. Oh, it's cheap. I'm buying it. People on, basic software are saying buy it, so they buy it. No, do more work than that. Best case scenario, we're not in a best case situation right now. Macro conditions, high interest rates. We might move there next year, but got to remember, the Fed don't have to reduce rates. We could hold high for a long time. I'm expecting rates to drop. However, we're not going to get any hikes, no doubt about that, but it might take a long time before they come down. So we're certainly not in this area. We could be in that. Undervaluation is great, but I am looking at this already and sensing already by just looking at the way the chart goes that there's going to be a trap here. And let me explain that in a moment. Worst case scenario, overvaluation. Okay, that I can live with that. Let's have a look. And there it is. That's exactly as I thought we'd find. I could just tell that by looking at the chart and the volatility and the way the stock price moves. What does this mean? And this is important to read this. Possible value trap detected. So it sounds cheaper than it actually is. Manipulation, not from our figures, but manipulation if you only read part of the information. A value trap occurs when a stock appears inexpensive based on fundamental analysis, but fails to reach its intrinsic value over time. There's no point a stock looking cheap if it never achieves its goals. In other words, like when I just spoke of, I just got electric shock. Oh, wow. Hang on. I just got a static shock. I've just put my, it's okay. I'm all good. I just got a static shock. I've got to put my band back on again. It's that time of the year. Oh, blimey. So we'll edit the video here. I'll edit that out. Edit at valuation. Oh, hell. That made me jump. It's just static. I'm all right. Okay. Forget what I was going to say. It's completely fried my brain. Doesn't matter. I'll come back to here. Bloody hell, that was scary. That doesn't happen every day, does it? Let's come back to here. You got a solar shock. As for me, I like the shock. You like it, do you? Well, good for you. I got to say, I didn't enjoy it that much. As we're just taking a break there, we'll just look at my portfolio. Yeah, I'm breaking all-time highs again. Very, very good indeed. Very, very good. Yes. I just want to see if anything's moving too much. Yeah. It's all good. Yeah, very, very good. Okay. Brilliant. Yeah, very good. Let me come back to the intrinsic value. Yes. So I think I discovered that and treating it as possible trap. Over time. Often due. Okay. Its intrinsic value over time, often due to underlying issues not reflected in the quantitative data. It's very, very important to understand that. Now then, let me move down and bring up to you a new feature that we have on our software. This will find the latest information from the most recent earnings report, compile it in a accurate way that we can discover what the company is saying as far as projections going forward. In a robust quarter, this is what was mentioned by the CEO and the CFO, Chief Financial Officer, at the last earnings, okay? In a robust quarter, Perion Network reported year-over-year revenue growth of 17%, totaling 185 million. This increase is part of a consistent trajectory reflected by a 2-year compound annual growth rate, CAGR, of 24%. Great. Key performance metrics also showed a significant increases. Contribution included TAC went up 19% to 77.3 million, and operating margins enlarged to 42%. Adjusted EBITDA and GAAP net income both rise markedly by 29% to 42.7 million and by 28% to 32.8 million respectively, while non-GAAP diluted earnings per share surged by 38%. Looking ahead, the most important thing, the company endorses its full year 2023 outlook, projecting revenue to grow by low to mid-teen percentages. Very, very good indeed. Okay, but we've got a valuation trap. It doesn't look it's not as cheap as it is. So anyway. Jose Quintana said, I heard the shock too. Be careful. Yeah, I need to, it's given me a bit of a headache actually. I need to fix that in a moment. Let me pause it again. Oh, thank you, Leah. I'm not shifting around at the minute because I've just got a big shock, static shock. Thank you. That's warm, isn't it? All right. So edit there as well. Edit there. And again, 3 minutes later. Okay. Now then, let's look at the financials of the company. Let's go deep dive into the balance sheet of the company. So first of all, if we look at the revenue is 692 million, up 5%. That's good. And expectations are moving up. We like that. Operating income. We were flat for a while. We're doing well. And we're expecting the curve to go up. That's good. Net income is up 2%. That's good. Income is up. Free cash flow is up 19%. Looking good. All this looks good. Capital expenditure. We've invested. We're now slowing down. But with the most recent range, we've increased our capital expenditure by 22%. So we are spending more money again. Operating cash flow up 19%. Balance sheet looking good as long as we don't have too much debt. Let's have a look. 904 million in assets. Very, very good indeed. And 267 million in liabilities. Okay. Plenty of cash on hand. Most of our money is held in cash. That's good. Good, strong balance sheet. Liabilities. Long-term debt. Long-term debt. Can't see any. Can't see any long-term debt at all. And the liabilities are only 267 million. So they're a very lean company. That's good. That's very good. Very good balance sheet. Not going bust anytime soon. I like it. Very, very nice indeed. And no long-term debt. So far, other than a valuation trap, this looks good. I wouldn't buy it though, because I would rather buy Google if we're looking at the advertising sector. But it's looking good. I was put off, wasn't I, by their website at the beginning. But anyway, there you go. Gross margins, 38%. 38%. Good, and they are increasing from 37 to 38%. Let's just scroll down just a moment, and I wonder if Google is in this list of competition. Let's see if they even regard Google as competition. Well, they don't, but I'm going to look at it. Let me type in Google and see how their margins compare. All right, so let's go back to Google just a moment. Look at margins. Scroll down to the balance sheet. Right, there you go. That's the sort of margins that you want in this sector. 56%. 56%. Let's go back to this company and see their margins are 38%. Now, what does that mean and why am I bothered about that? Because the competition can crush you because your moat isn't that wide and you could easily lose your position but by having margins this narrow. Now, margin, it sounds good compared to the car sector perhaps, but a tech company has massive margins. So it's good that they're improving it. It was higher at 56%. They need it to 58%. They need it to increase because they can be crushed by the competition. Google, for example, could lower prices on advertisement and they could, that kind of thing, and take away your edge, if you like. Now, as I said, I'll give you a profitability score. They're not going bust anytime soon. They're absolutely not. And because they've got a 74% solvency score, no debt, loads of cash, not going bust, one of the highest solvency scores I've seen. However, doesn't make a business worth investing just because it's got cash. I'm an investor. What I want to do is give you my money, which you grow and return to me. If you start a business and you've got loads of money, you're not going to go bust because you've got loads of cash. However, eventually you can spend your cash, but can you turn the cash into profits and thereby return the profits to me, the investor? That has not been proven to happen yet. That's what the valuation trap suggests. Loads of money, loads of potential. Now we've got to execute on that. If we look at the profitability score, 67, that's pretty good. Nothing wrong with that. We're not red, we're not bright green, but profitability score is 67. All the metrics are getting a nice green tick. Now, again, it's important to check. If we look at Google, see what their profitability score is. Again, the power to crush the competition, the power to reduce prices. Let's go down and look. There's Google, profitability score of 73. Making a lot more profit, thereby their solvency score is also good, of course. All right, that's no question about that, obviously, right? Let's go back and continue our review. So just because you got cash on hand and no debts doesn't mean you can make me money. All right, Wall Street analysis. Rubbish. They don't know what they're talking about half the time. They're saying 52% on the upside at best case scenario. We're not that. Wall Street is saying 23% within a year. Good. You can make 10, 15% at the moment, 20% on the S&P, but that will trim back next year. And on my high growth stocks like Virgin Galactic and other things, I can make a lot more money than that, but nevertheless pretty good. On the worst case scenario at 1%, at least you're not losing any money on the downside, but I don't really regard Wall Street as a very good gauge on whether I think the stock's going up or not. Competition, I'm going to give you the link to, you can use the competition, and please do go and do that. I will give you the link at the end so you can compare competition. Ownership, that's where insiders are buying the stock, selling the stock. As we can see, there's been no measurable trading from transactions from insiders recently. The last transaction was made June 27th, 2008. Bloody hell. And who sold 4.7 million. That was Longview Fund. It's back in 2008. No one's been buying the stock, selling the stock. Now that's actually good. I like to buy before insiders buy. If insiders are buying, that's great. However, the reason for doing analysis and research is so you can buy before they buy, so I can be in on the stock before they buy. But the wonderful thing is no one's selling either. So that's kind of interesting. All right. Let's move down. Do we have any short interest on the stock? Well, 5%. Let's put that in context. 20% is excessive. You are now moving towards a short squeeze. If there is volume, this stock doesn't have volume. It's also only 5%. So is that good or bad for the stock? Well, remember when Roaring Kitty defrauded the world and pretended to be somebody else and pumped GameStop, which was a rubbish business, by the way, it was at 100% when it exploded. 20% is what we are now in 21%, 22%. Virgin Galactic, we're getting a short squeeze, but it needs to go up to get it to explode. All right. And I mean, when I say explode, I mean go up several 100%, not just 5-6% a day. However, I kind of prefer that. It's more stable. However, 5%, what does that mean? There's going to be no short squeeze. It's not enough short interest. We don't have enough volume looking at the day-to-day trading. However, it's negatively impacting the stock. It's not going to boost it up. It's not at the edge of a squeeze. It's simply bringing the stock down at the moment because of negative sentiment. However, it's not that great. To give you an idea, some of the greatest companies in the world still have some short interest. Less than 0.5% with Apple. No one's shorting the company, but there you go. But that's where we stand there. Now, Perry, I'm probably going to rank number 1 in the world with this in 5 seconds on Google and YouTube because no one's covering it. There is no news. There are no analysis really being done. There's no real discussion going online. So I do invite the CEO to join me and perhaps educate me further on the stock. Over the last 90 days, there has been nearly all positive sentiment. The last 30 days, there's negativity has started to creep in. The last 7 days, negativity has become 25%. And today, there isn't any news. There's not a lot going on with this stock at the moment. Not a lot of interest. Not a lot of people know much about it. Okay? So there we go. There is my initial thoughts on that. Now, let me go back over to, as I wrap up this review, back over to here. For me, it's not a buy because I don't think it's anything proprietary and unique. That's really important. It's in the advertising space, and yet it doesn't understand dark mode on its website and does a terrible job with it. So whoever's running that area isn't doing a good job, and it's not even a good, well-designed website either. So I don't like that. It has plenty of money on cash. However, it hasn't yet proved itself that it can actually make money for the investor. So it's a watch list for me. I'll keep my eye on it, but I'm not buying it. I'll probably never buy it. I would rather own Google. However, it's not exactly the same company. It's a very different company. So there's my thoughts. Looking at my portfolio today, as you can see, we're consistently beating the market, consistently beating Warren Buffett. Let that refresh a second. That's not 16,000 at all. It's more like 72,000 now. There it is, 72. New all-time high once again. In fact, we're at 73. With my gold that I've taken out for the convertible note. If you click above my head, you'll see all the links on my X account where I post my trades before I make them, so you know what I'm doing. My Instagram as well, all my links on my website and all the rest of it. Down here in the description, you'll see links to Alpha Spread. That's the service that I provide here. And you can use this software. My members can get a lifetime discount, which will basically make my membership for free. It's the most honest, real, unbiased way to review any stock. And I do all my reviews, and all my reviews will appear on there above CNBC, above Bloomberg, above Mad Money, Jim Cramer. Well, that's easy because he just makes up stuff all the time. And you will see all my reviews. Over here, I'll put the full list of my Alpha Spread. I've done about 36 stocks now. They're all on here. And down here, meet the CEO. I'm interviewing all the CEOs from all the companies from the New York Stock Exchange. Just done a deal with the manager of the floor, and I'll be doing that, hoping to interview Richard Branson, Elon Musk, everybody. We've done our first one last week, and the journey continues. There you go. If you're a member of my channel, I'll do a full review for you. Click above my head, down here, over here, over here. As always, take care of yourselves and each other. All right. Okay. There's my review. Pat M, are you here? That was for you. Pat M, are you here? That was your review. We're going to do another review in a moment, and it's going to be Chris C. wants Galloway Golf. Let me go back to my main portfolio. Virgin Galactic, very nice indeed. We've got some original members just popped in I want to say hello to. We've got one of our original members, founder members, Dr. Nathan Smith. And he's got a gold badge. You may notice he's been a member of the channel since the very, very beginning. And it's lovely to see you again, Dr. Smith. Since you can, oh, by the way, you can call in if you want to. We've got a new feature. If you want to be live on my show and phone in, or any of my members can phone in, have your say on the show. Since you've been gone, Dr. Smith, we've raised our price targets and our objectives. We are heading, we've got a target of 10 million subscribers. I've looked at the competition, how they're growing, they're not, how we're growing, our growth rate, and I'm aiming at 10 million subscribers. We've got over 350 members now, and we are now interviewing all of the CEOs from the New York Stock Exchange. I'm getting they prefer to speak to me than Bloomberg and Yahoo Finance. I've spoken to the floor manager of the Wall Street. Our portfolio, we've set a price target of $100,000 and $1 million ultimately long term. So that's what's happened in the channel since you've been gone. We've had some wonderful special moments, and it's lovely to see you back here again. All right. Anyway, it's time for me to take. I've got to bring this back in play. I've got to put this back on now. This is my static. We're getting that time of the year. I just got a really big shock. It actually made me jump. It put my screen out of action for a moment. It's not good. So I put this here, and this earths me. I need to find somewhere to connect it to so I can be grounded. I'm going to have to find somewhere to clip this. I need something metal. That'll do for now. Anyway, I'm going to take a 5-minute coffee break because Leah's just bought me a Starbucks and a breakfast. I'm hungry. I've not eaten yet. We are doing an extended show because we are doing reviews this morning. When I'm trim, I'm called a shorter. Love the show. Thanks for giving me something to pay attention to during the week, Martin. Ed, you're very welcome. Enphase doing good after the news. I trimmed my Enphase this morning, as you all know. Tell me about it, Ed. I'm in space, 5.7. Year to date, finally back to space. I'd heard the shock too. Be careful. Oh, you heard it, did you? Those shocks make your hair stand up. Not in my case, they won't. As for me, I like the shock. You got solar shock. Maybe the Panchico machine on the website is a dog whistling. The web page looks like a fun fair slot machine, not a great look. As in Carnival, Martin, did you invest any in cruise stock after the pandemic? No, I didn't. I don't believe in those. I don't believe in Carnival. I think it's rubbish. All right, I think we got through all the comments. Niels, there's a very specific reason why I sold, the psychology of investing, and I've put it, it's going out as a video later by itself. So I will, I made 26% profit on it, and I explained why specifically to trim, to bring the portfolio back into balance. I've got my seed money out, but on paper, it posted as a loss. If I'd waited for the extra pump this morning, it would have posted as a gain. I actually posted it as a loss, even though I actually made money because the shares it sold were the ones that I bought at 150. Does that make sense? Overall, I was up, but on paper, I was down. And I did it because, one, I don't pay tax. One, I've realigned my portfolio. I've reduced my margin by 11%, which is 8%, of course, a year. I'm now going to move that amount of money into the Roth IRA, gain 3% back, and buy Enphase when it dips if I choose to do so at that point. But even so, now I can forget about Enphase and leave it there, all good. All right. Okay, so I'm going to get my my drink and my food. Bear with me a second. I feel a little bit dazed from the shock. That shock actually made me jump. So let me go and get my snack a minute. All right. Okay, so what we're going to do, just bear with me a sec. I'm going to take just a moment break because I'm going to do my next review. So I'm going to have some breakfast. Actually, Leah, could you do me a favor, please? Because I'm plugged back in again to the anti-static band. Could you bring me a plate? You won't be on camera. Just pass me a plate into the studio, if you wouldn't mind. I should have brought one in because I'm gonna have because I feel a bit sick because of the shock. So I'm gonna eat this. Thank you. Thank you very much. All right. So we're gonna do our next review in a moment. I'm just gonna take a minute break, drink my coffee, and have this sandwich. So just bear with me a couple of minutes. I've just got a big static shock. It's made me feel a bit sick, so I just want to eat a sandwich, and we'll be right back. Okay? So should I put some music on? Should I put some piano music on? Well, while we're watching. Anyway, here we go. See you back in a minute. And when we come back, we'll do Galloway Golf. Galloway Golf will be our next stock review. Paul Noel says get a haircut. Do I have any Jerry Rafferty? The music I play is for copyright reasons. If I played anything else, it would get copyright flag. What whiskers is that? Shave my chin whiskers? What are you on about? Shave my chin whiskers, you cheeky sod. Oh. Do I play any? Jerry Rafferty. I play Ferry Across the Mersey. Is that Jerry Mars? Oh, that's Jerry Mars, isn't it? Is that Jerry Marsden? Yeah, I play Ferry Across the Mersey. Jerry and the Pacemakers. You know what they say about follically challenged men? Grass doesn't grow on a busy street. There you go. That's right. Asthma. Let's hear those bites. Oh, yeah. It's not that kind of show, mate. All right. So next review is Callaway Golf. Best YouTube live eating channel. Yeah, nothing like it. Where are you gonna go to watch this? Amazing, isn't it? Okay, I feel better now. It was quite a shock. Oh, what's happened here? Why did it do that? Yeah, I'm gonna have to do some more work on this to fix this, I'm afraid. Anyway, I'm gonna be careful today. Too much static in here. In fact, I can fix that. I can help it a bit more. All right. Okay. It's now time for another review. So I'll put Pat's out later, but we're now going to do another review. And let's see how many likes we got on the show so far. 70. Oh, look at that. You can't get better than that. 73 watching, 74 likes. It's like, how is that even possible? It's possible because some people have left who liked before. But it looks pretty good though, right? Looks good. It's not really true though, is it? Anyway, thank you very much. There we go. Okay. Let's have a quick look at the subscribers. 13,000. And, oh, what? We didn't get any today. I was hoping that was going to roll round. 13,007. I was sure it was going to roll round. Never mind. That's really peculiar. 400 in the show, and it hasn't rolled round. Oh, very weird. Let's do our next review then. You ready? Okay. Haha, Jerry Pacemakers. It's a real band from Liverpool. Liverpool, Jerry and the Pacemakers. Ferry, Cross the Mersey. Great song. Anyway. The problem with Topgolf is their pictures of beer. It's filled with cold metal cylinder to keep it cold. Like me and my boys won't drink it before it gets warm. Aha! Okay, right. Let's go back to our next review. Virgin Galactic, 256. We're now up 63%. Very nice indeed. Palantir, Gold, S&P, Amazon, Apple, NEE, Enphase, Coca-Cola, J&J, Kenvue, Chevron, Tesla, Rivian, McDonald's, Google, Microsoft. Okay. Okay. So Chris C, are you here, Chris C? Chris C, are you here? I am indeed. I love it. I am indeed. Callaway. Callaway Golf. This is an interesting one. Callaway Golf. Let's have a look. Interesting. Okay, we're lining it all up. What do they do? Product review. Okay. Do they speak to their investors? Nice website. Very clean website. Okay, let's find. That's what I'm looking for. That's what I'm looking for. Okay. Got some good stuff there. Portfolio is looking strong. End phase trying to trim back down. That's good. Okay, here we go. So the stock ticker is MODG. Callaway Golf. Their ticker is MODG. Okay. We'll line that up. We're not, let me just line it up there first of all. MODG, Topgolf Callaway brands. Are we a dividend paying stock? No, we're not. Let's have a look at the growth. I just realized because of my electric shock, I never did the S&P analysis. I was completely thrown off there. I did everything apart from that, but it did make me jump, I'll tell you that. Right. In red. Okay. I think we're good. Time for another review. Are we in members only mode? We need to be, so we don't have any clowns ruin the video. Okay, we're about to make a video. This is another review. This is for Chris C, MODG, Callaway Golf. If you want to do a super chat through it, you want it to be on the video, If you do a comment, it will read it out. So if you want to be on the evergreen video forever, please feel free. Maybe you've got a comment. Maybe you love the golf. Maybe you love the business or whatever you might be, and you want to have a comment in the video that will live there forever. You certainly can. All right. So have a look at that. Okay. We're all set. The time is then +7, +8, +9, 2 hours 45. 2 hours 45. MODG. MODG. Callaway Golf. There we go. Time for another stock review. This time we're talking Topgolf Callaway brands. It's part of our full review series, which is open and honest. In this review, you're going to see the most advanced algorithmic software, the latest news, latest information. I'm going to give you the balance sheet, who's buying on the inside, who's selling on the inside. I'm going to give you a solvency score. I'm going to share with you what my position is, what I think of the stock. I'm also going to share with you the website. We're going to take a look at that. We're going to look at how they speak to their investors. We're going to look at the most recent news. We're going to look at how it compares to the S&P 500 and whether it's a good investment or not. We're also going to cover on the inside who's selling, buying, profitability score, solvency score, you name it. It's all coming up in this video. It's also part of the Meet the CEO series. I now do interviews with Meet the CEO. We get to know the person behind the business. As an investor myself, I'm consistently beating the market, consistently beating Warren Buffett, and I buy businesses, innovative businesses, unique proprietary companies, but I get to know those that work there, and that's very, very important to me, and I share all that with you on Meet the CEO series. All of that will come at the end, and you can see and even buy a gold mine from a CEO who was on our show just a week or so ago before it IPOs. How exciting would that be? All right, let's get straight into it. Golf Callaway brands. Is it a good investment? Is it a good business? Just because you're a golfer and you play golf, does it mean to say you should buy the business? Well, I'll tell you right now, I don't play golf. I play crazy golf, and I've had a lot of fun with doing that over my life, but I've very rarely gone around a whole proper 18-hole golf course. But anyway, let's get straight into it, and let's have a little look about Callaway Golf. So we're going to start with a very basic line chart, and then it's going to get much more advanced as we go. And we're going to get into what we like to start nice and simple, because that's investing is simple. It shouldn't look complicated. All right. It's very simple if you read the balance sheet and talk to the people that work there. Click subscribe or ring the bell and give me a thumbs up if you like this video. I really appreciate it. If you like the video, it's going to suggest more content like this. If you don't like the video, and that's fine. Maybe I don't like you either. It's perfectly fine. If you don't like the video, then you won't be shown my content anymore. So decide, but do something. Sign into Google and do something. Well, it's straight away, the very first introduction. If we look at the line chart, it doesn't look good at all. Over the maximum period, you've made no money. In fact, you've made 8%. There's no real reason to own the company, is there? It's just gone sideways for forever. In fact, we look back here at 2023 years, you'd have made more money sticking your money in the bank in a high interest account if you can get one for 8%, which there are, you've not really made any money with the risk and volatility. If you can trade it, however, maybe if you're a scalp trader, there's huge opportunity here. And we're going to look at the sentiment of the investor and who's buying this in a moment. But this, to me, looks like a scalp trader's dream. Buy it here, sell it here, buy it here, sell it here, over and over again. Buy it here, sell it here. I mean, it's obvious. However, do that on your Roth IRA, don't pay any tax. If you do that on your main account, you'll pay tax on it. So is that what this stock is? Is it a scalper's dream? I don't know. Playing golf and owning the stock is very different. Let's look into it, though, because it's not just about golf. It's the Callaway brands. So they do other things. Let's read what they do. Topgolf Callaway Brands Corporation engages in the manufacture and distribution of golf equipment and accessories. So looking at the chart, just basically, just the first review, it looks like it's not growing. It just looks like it's business as usual. To me, so far, it's saying a scalper's dream. Anyway, it operates through the golf equipment and apparel, gear and other segments. The golf equipment segment focuses on the design, manufacture, and sale of full line of golf equipment. Okay, the apparel, gear, and other segment refers to development, sale of soft goods under the Callaway, Travis Matthew, Ogio, and Jack Wolfskin brands. The company was founded by Eli Reeves Callaway Jr. in 1982 and is headquartered in Carlsbad, California. The listed name is MODG, Topgolf. So my initial reaction is I know enough about golf to know this name. I buy stocks where I know the CEO, I know the brand, it's proprietary, it's unique. I would say this is in that category. Callaway brands would be... if I was going to buy a golf brand business, this could be the one to do it. Like Tesla, is EVs, Apple is AI and technology and phones, of course, and Google is whatever Google is, Amazon and so on and so forth, Virgin Galactic, you get the idea. This could be, for me, as a scalping stock. It's not a long-term investment. It's not a long-term investment, but it could be a trading investment, in and out scalp trade, because golf isn't going away. This business doesn't look like it's going to go away. We'll get into the deep numbers in a moment. And it's not really growing, but it's consistent. You're going to keep buying golf clubs. You're going to keep buying apparel. Your things are going to wear out. You're going to keep, doing these things. So I can see once you're in the Callaway brands, you're going to keep replacing your bag and your equipment and so on and so forth. So I can see that. It's been around since 1982. It's by CEO is Oliver G. Brewer. I'd like to interview you on the show. If you'd like to contact me, Oliver, I'd love to have you on the show and discuss your business. If you use margin, and you can actually see what I just said actually makes sense. It's volatile, doesn't go nowhere. However, there's no risk with the stock. It looks pretty solid. 25% is the lowest risk on margin. You can buy this company and just trade it on the dips and make money from it. Maybe that's the way forward. We've got an average volume of 5.93. So it's low volume, but it's got some volume. So you've got to be careful how you trade it. Remember, stop trading losses only work during main hours, and they don't always guarantee the price unless you have insurance on it, which you can. Today's volume is very low. There's no movement today. I reckon this stock is just, if we look at it right now, no volume today. If we go here, it's started to move today, but not much volume. So it's a few trades, substantial trades. This is definitely a scalp trade job. Let's look at the over the month. Yeah, 3 months. Yeah, bounces around the same trend line. It's not a long-term investment, but you can make money on these dips, definitely, if you can buy it around here. Anyway, let's look on. Morningstar do reviews for this particular account. I don't like their reviews; they're very biased. I will be much more honest and open in a moment with you when I get into the numbers. The company makes money. It's has had a period here in 22. It actually lost money. It went negative for a while. It missed on earnings and dropped down, but we're back again. But we are trending along a sort of mid trail. We're not growing. We're just going sideways. Who else buys this stock? This gives me an idea, and I can see exactly where this is going. DraftKings, Penn Entertainment, Disney, Nike, Uber, Southwest Airlines. What does this have in common? Old money. Old school money, the sort of people that play golf, retired, wealthy individuals, couples and so on, who have plenty of money, who buy what they like. They play golf. They want to be invested in it. Doesn't really make any money, but it can trade, like Disney, for example. I can see the sort of sentiment. These are the people that are buying this stock. Let me now go and look at their website, and then we're going to look at the news, and then we're going to go into much more detail with the numbers and see how we can trade this. This is the website. This is what it looks like to the customer. It's a nice clean website. We can see what they're selling, the equipment. It's standard stuff. Everybody buys it if you're a golfer. It's a good, clean website. Works all the way. No one's going to stop playing golf anytime soon. No issue here with the website. No issue at all. Very nice indeed. That's great. How does it speak to the investor? Well, I don't care as much now. I'm starting to get a picture that it's a trader's dream, not an investor's dream. Let's have a look at how they speak to the investor. This is how they speak to the investor. Give me a flavor of, is it an investment or is it a trading? It looks, so if you get an impression of this, you've got to remember how these websites are put together. This to me feels and looks, very nice website, very clean, very good. Looks to me like a lifestyle. And what I mean by that is, if you are an investor, if you are a wealthy individual that likes to trade, that likes to play golf, you like the Callaway brand, you'll keep coming back, buying the t-shirts, buying the hats, buying the equipment, buying the shorts, buying the clubs, buying the balls, buying the bags, all the rest of it. You'll keep it in the brand, and you'll feel it's like an engagement. It's a lifestyle. It looks cool. I think this speaks to me of buy our goods, stay in the family, play golf, do the things that you do, be in the community, and you can trade along the way and make a few bucks. That's what this feels like to me. That's what it looks like to me. I'm going to look at this as an opportunity for me to do some scalp trading on my Roth IRA, and I'm going to see if the numbers add up in a minute. Anyway, let's have a little look. Topgolf Callaway Brands, let me zoom in a little bit, is an unrivaled tech-enabled modern golf and active lifestyle company. Lifestyle. I didn't look at that. See what I mean? Lifestyle, the words, the feeling of this. It makes you feel that you're part of a family. The Callaway brands, the feeling of it. You can buy it, own it. People are going to keep coming back, buying the products. I think the business will just go along sideways. It won't really grow. It'll make money. It'll always make money, and you can make money as an investor, as a trader, I think. Anyway, okay, all good. Let me look down, first of all. Sustainability program. Good ethics is a good business. Is a belief that has guided our improvements in social and environmental performance. Let me just zoom in a little bit for you. Over the years, and has inspired us to continue to take steps forward in our approach to sustainability, transparency, and accountability. Explore our sustainability strategy. I haven't got time to go into all of these right now, but I like that. December 27, press releases, Arkansas, second Topgolf venue will be located at 5 Topgolf. Okay. That's interesting, but I don't need to look at that right now. Yeah, it's not talking about as an investment. It really isn't. It's talking about buy the brands, be in the lifestyle, be part of our cool products, and you can trade it. That's what this says to me. This is what it says to me. We got some news only out just a few weeks ago. There's not a lot of investor news around the stock. I don't think there's going to be many reviews done on it. It's business as usual type business. That's what I reckon. Let me have a look at this latest news and see what it says here. I'm just going to read the first paragraph. Topgolf announced today that it has purchased certain assets from Invited Inc., the largest owner and operator of private golf clubs in the US, related to its Big Shots Golf. The acquisition adds the Big Shots brand and certain locations to the company's portfolio of the US venues, expanding its leadership position in off-course golf. The acquired Big Shots portfolio includes four domestic venues comprised of one owned venue and 3 franchise venues, as well as certain other development rights for other potential venues. Concurrent with its transaction, the company has also entered into a preferred vendor agreement with Invited, in which Topgolf Callaway brands, products, and merchandise will be featured at Invited's more than 140 golf at Invited's more than 140 golf and country clubs. The purchase price for this initial closing is approximately $29 million. The company expects the acquisition to be nominally accretive in its first year and contribute to scaling economics thereafter. The transaction is viewed as both financially and strategically attractive to both sides. Okay, enough of the news. Let's go into the numbers. And let's see if this actually makes sense from an investment standpoint. So far, I'm looking at it as a scalping opportunity, a quick day trade, a swing trade, buy for a week, maybe a month, sell, but you do that on your Roth IRA so you don't pay any tax. That could be a nice, fun thing. I might even buy some in a minute just to get the ball rolling. I'm in the mood. I'm in the mood to do some scalp trading. So let's have a little look. Okay, here we go. Intrinsic value, MODG. Let's have a look at this now. Now, undervaluation, 39%. Okay, good. But intrinsic value, as we know, is not enough by itself. We need to check more information and make sure there's more to it than that. Best case scenario, 54% undervalued. Worst case scenario, 20%. But is there a valuation trap here? Has it not achieved its values over time? Let's have a look. No warning. From the first moment I saw this, it looked to me like a scalper's dream. And right now, I think it is. It's undervalued. There's no warning. Let's see how the balance sheet stacks up in a moment. Let's have a look at that. Historic profit, 19%. Nothing really. I can make just as much on the S&P, but it's stable, it's solid. Has it got good management? I'm guessing it has. From the Callaway brand and the name, I guess it has, but we'll come to that in a moment. I would say you buy at the bottom, you get a 10% swing, you do it on your Roth, you pay no tax, you make some money, and not really worry it's going to go up over time, but not long term. It's going to go back down again. Okay, let's carry on. Let's look at their last earnings call, Q3 of 23. This is where we pick up the most important points from the presentation. We cover all the earnings from our companies that we buy. If I buy this, then I will be doing that. In the face of a challenging environment, no question about that, Topgolf Brands is adapting its revising its 23 revenue and EBITDA guidance to $4.25 billion, I beg your pardon, $4.25 billion and $580 million, citing lower than expected Topgolf venue sales and tough conditions in Asia. No surprise there. Despite these challenges, the company remains committed to becoming cash flow positive by implementing new promotions and continuing the expansion of its digital platform. Okay. Which should constitute 60% or more of future sales. In a notable, and that's good because that's much more efficient. You can be, your margins can be improved if you get into that sector. in a notable change. The target of achieving at least 800 million in EBITDA has been moved from 2025 to 2026 due to foreign exchange headwinds and economic trends. Meanwhile, they plan to cut operational costs and capital expenditures, realizing approximately 45 million in annual savings and reducing capital spending by about 100 million over 2 years. Okay, that's potentially good. I think at the bottom, and if we just look back at the stock of where it is today, if we look over a 3 month, because I would say this is a 3 month swing, something like that. The time to buy it would have been $10. We're at 14. We are mid-swing. Talking of a golf, we're mid-swing. Do you like that? No pun intended. 1 year, we're down. 5 years, we're near the bottom. The right time to buy it was a couple of months ago. But nevertheless, 19% this past month. I perhaps wait for an opportunity, keep my eye on it, put maybe a market share down. Anyway, let's carry on going. Let's look at the revenue, the financials, okay, before I get too excited about a swing trade. 4.2 billion revenue on its most recent range. This was the time to buy it, no doubt about it. But anyway, 23, we're expecting, look at that, there's a slight S-curve coming in. This is expectations only, it's not facts, but nevertheless, I would tend to agree with that, though. I think the economy is going to improve, and it's going to take a few years to filter through. That doesn't mean to say you can't swing trade it. 4.2 revenue, up 1%. Operating income, 236, up 2% on the most recent range. 99.4 net income has dropped the most recent range, but we are expecting... sorry, beg your pardon. There we are. 99.4. We are expecting a decline. Hence why I would wait to buy this now. I think it's already risen. The next trade will come and then you buy it. We might get a rise of net income going into the next year, but not yet. I would wait to buy it in January if I was going to buy this. Operating cash flow dramatically improving. That looks good. Capital expenditure, you've heard what they've said. It's been increasing, but now they're cutting back. So the most recent range is +3, but going forward, they're going to reduce this. So this is a good sign. Free cash flow is up 27%. Things are going to improve, no doubt about it. Now then, let's look at the balance sheet. The balance sheet is very, very important for me to decide whether I buy a company or not. 9 billion in assets. 5 billion in liabilities. Good. Is it all long-term debt, or are they spending on stuff currently? Let's have a look. Long-term debt, 1.8 billion. Nearly half of their liabilities is long-term debt. Is that good? No, it's not. It's not good, but it could be a lot worse. Long-term debt is 35% of their liabilities. If they're reducing expenditure, they should be able to reduce their debt position. Interest rates are coming down. It could be a catalyst. I would say the way to play this so far, from what I've gathered so far, is it's not a long-term investment. You make much more money everywhere else. You can swing trade it, no pun intended, and it's now about 5% above where I would buy it. I would wait for a drop of 5% so I can set a buy limit, maybe $500 to get me started, maybe $1,000, get my seed money out of it, make some money from that, and then play with the money, the house's money, if you like. That's how I would like to play it. So I think I will do a scalp trade on this, a swing trade on this one. And if it pops in a day and makes 10%, I'll take it. But I think I will wait for it to drop 5%. So around about $11. I would like to buy maybe $500 to $1,000 of it. I will look for a 10% swing in the matter of 3 months, take my profit, do it on the off, no taxes to pay, and then watch the balance sheet and see how it improves. Their efficiency of the company, this is very important. I'd already made my mind up that this was going to be good. I can see that just by the experience of looking this far down so far. The gross margins, they're obviously leading in their industry. They're obviously, they are the one to own, if you like. 62% margins, very, very good. 62% margins and a lot of apparel is phenomenal, actually. It's very, very good. So you can make money very quickly on this company. 62% is good. Operating margin, 6%. I'm liking it. Return on equity, 3%. Good management. Solvency score, that's being brought down by that long-term debt. They're not going to go bust, though. They're not going to go bust anytime soon. There's no issue with that, but they've got a bit too much debt. They need to reduce that, hence why I'm not buying it here. Wait for it to drop 5%. Buy between 500 and 1,000. Do a swing trade over 3 months on my Roth IRA. That's my strategy. Make some easy money, and I feel comfortable with that. Solvency score isn't great, but it's not red. They're not going bust. Profitability score is only down because of the amount of money they're spending on interest payments, which could improve dramatically quite quickly. Let me just have a look back at the balance sheet again. How much cash do they hold? Yeah, 330 million. Most of their money is invested. It's not, that's not much cash for a company worth 9 billion or 300 million assets. They're using all their money. So it's not the golden goose, but it is certainly an opportunity to make some money. At the Wall Street's targets, and Wall Street are rubbish. They're just traders. They're not investors for the future. They don't really know. That's a wild guess. Don't know where they'd get that from with the situation, the balance sheet, where they are. I don't see that. I can see that if it drops 5% over 3 months, which outperforms the S&P, it's worth using margin to do that at 8%. I would certainly do that. That's what I'm looking at. 29% downside. That's why I would wait to buy it around $11. That's why. And that's what I just said before I saw that. Okay, so let's see who's buying and selling. For a long-term investment, it's a very different thing than looking at than scalping and swing trading. So before I looked at this, from just looking at the website, the way the website was done, psychologically, read the room, read the audience, it was very clear to me that this was being promoted as a stock, as a lifestyle. Rich golfers trading. And there it is. There is the evidence of what I could see from just looking at the website before I looked at the numbers. And I promise you, I do this in real life time, unedited. I'm learning for the first time. That's exactly how I described it from looking at the images and the website. The website was saying rich investors who play golf, who spend money, who make money trading. The very people who work there do exactly the same thing. The insiders buy and sell, buy and sell. It's a trading, swing trade, scalp trading stock. What you do, though, is you understand the balance sheet, you understand the debt situation. No, it's not a long-term position. You build up a portfolio of make free money, and after maybe 2 years, you could end up having all free stocks, playing with the house's money, and pretty much guaranteeing you're going to make 10% every time without any issue, maybe twice a year, outperforming the S&P, keeping your keeping your solvency, keeping your liquidity. You got money in cash, you can get in and out as long as you buy it at the right time. So to me, buy it at 11, sell it at 16, make some money, everybody's happy. That's the way to do this. And the very insiders are doing exactly the same thing. It's not a long-term investment. It's simply a trader's dream. What's the short position? Well, that tells you everything you need to know as well. That's reconfirmation. 12%. It's not going to get a short squeeze. Not enough volume. It's nowhere near a short squeeze at 20% and beyond for a short squeeze. It's not going to short squeeze. It's being shorted because this stock is being traded. It's being pumped and dumped and pumped and dumped over and over again. We know that. We looked at the beginning of the video. We saw who was owning it. So we know the sentiment. We know the sort of people, how they behave. Read the room, read the public. You always get it right. It's very, very easy to make money. The hard part is to keep it. So we can see exactly there. It's got short interest. We've got insiders buying and selling as fast as they like. I'm not going to play the news because it was 8 months ago. This would be irrelevant for this kind of stock. So I'm not going to waste your time playing this review. Who was it who spoke? Was it the CEO? Matt Boss, Leisure, no, JP Morgan joins. No, I'm not going. That's not worth it. That's not of any help to you at all. So I'm not going to waste your time. And the exchange is very biased and their information is very inaccurate. So there's nothing there to help you decide whether you should buy this stock or not. Anyway, there you go. Let me wrap up this review. So this was a review done today for Chris C. Asked me to do it. Thank you very much indeed for being a member and asking me to review this stock. What do you think? Do you agree with me? Leave me your thoughts in the comments below. Is it? Am I right? Is it an obvious swing trade position? I'm going to play it. I'm going to wait for 11. You're going to see me do it live on the show. That's where I think how this stock works. That's the people that are in it. If you click above my head, you'll find the links to my X account. You'll know when I'm buying and selling everything, and my links to my website where you can get access to my software that I use. My members will basically get the software for free because my membership will give you such a good discount, better than anyone else, including Bloomberg, CNBC. I get the best discounts of anyone. That's what I insist upon if I do a deal with anyone. I don't get paid by them to sponsor or do these reviews. They're open and honest and real. Look below in the description. You'll also find all the links. And over here, you'll see all my Alpha Spread reviews and meet the CEO as well when I talk to the CEO of the company and learn more from the company when I learn about the mind that runs the company. There we go. You can have a review like this as well. Make sure you have tapped the like button. It really helps the channel. And subscribe for more breaking news. Until then, as always, take care of yourselves and each other. Swing low, sell high. No pun intended. Yes, it was. I did it on purpose that time. All right, there you go. Two reviews today. That was good. I enjoyed that. Paul Knowles, totally agree on Callaway. Seems like a good strike. Oops, 12.50. No, I know what you were saying. There you go. Cheers, Martin. The potential long game with MODG is with Topgolf venues, an acquisition a couple of years ago. A lot of non-golfers go there. Chris C, I don't see it as a long-term. If it was a long-term, why are the insiders selling it? They're trading it. I mean, of course, they can trade it for now and then start holding it and acquiring it later on. We need to establish that could happen. But anyway. I'm in there in the 13s, but always good to get alternative views. Yeah, I'm with you. Right, there you go. Now then, I'm going to get off. Let's go back to our main portfolio, and we're obviously, consistently up, consistently beating the market. I've trimmed my margin, 72. Really, really good. Did end phase come down at all? Probably not. Well, that's a bit. There you go. I was right to do it. There's no doubt about it. I've explained why. Anyway, I'm going to get off. Let's do day trader of the day. Let's do that now. Let's do... Why is my... looking a bit odd on Discord, on TikTok today. There you go. Looking a bit burned out. That's the unfortunate thing about TikTok. You've got to stream on a phone. It's terrible, really. Anyway. I'm 49. I play golf in the UK. Callaway is an old man brand. Wait for Mizuno. Well, it's not. As I say, it's a swing trade, not a long-term investment. Paul, that's what I think. Anyway, day trader of the day. If you are watching on a mobile or a computer, the same. All you've got to do to be part of these events is click the like button. Make sure that you're up to date. Now you're 30 seconds behind the stream. Now click the cogs and click playback speed. Now you're 10 seconds behind the stream. Now you can take part. Watching on a mobile or a computer, the same. All you've got to do to be part of these events is... Alright, so I am up to date 3.94. 0.94 today. I would have been up a lot more than that if I hadn't sold my end phase, but I was right to do it. Dead right to do it. Up 3.94, 3.75. Martyn Young goes into the lead. We've got John Granforth at 3.85. Everyone's doing very, very well today. Very nice indeed. Martyn Young, I think, is going to be the winner. Let's wrap it up. Who is the winner? Who am I going to give it to? We'll give it 10 more seconds. Hi all, Mitch NL. How you doing? How you doing, Mitch? Buckarooni's up 3.9. Very nice indeed. Martyn Young, I'm going to give it 5, 4, 3, 2, 1. Congratulations, Martyn Young. Let's give him a big thank you. There you go. Absolutely awesome stuff. Well done indeed. Mitch is up 1.81. That's great. Well done to you. Let's get out of here. We've got premieres coming up, so you don't want to miss that. And let me... what was I going to do? What was I going to do? End the show. That's what I was going to do. Woohoo. What a great day. Let's roll the credits. Right, subscribers. That's Electric Shop. Chris C gave me a super chat because he wanted his review done straight away. Thank you very much indeed. Neil's up 1.21. Congratulations. Congratulations, Martyn. Very, very good day today. It's a good day every day, isn't it? It's a good day every day. David Burrows up 3.8 plus. Very nice indeed. All right. Look out for the premieres. Look out for the reviews. Please join in with all of them. Let me get rid of that. There we go. That's it from me. Thank you very much indeed. The portfolio is looking more than I deserve. There you go. I've made $2,000 a day. I've trimmed down some margin to do so. And very, very happy. 47.72, which is actually 73, because $1,000 taken out for the gold mine. And it's all good. End phase now trimming off. Perfect. If it goes below 100, I'll buy it back and buy some more. On paper, I lost money. In reality, I made money. And it's a win-win situation. That's it. That's it from me. What about Virgin Galactic? Up nearly 4% today. $2.57. Be $4 before you know it, folks. That's it from me. Thank you ever so much. Did we get any subscribers today? Let's have a quick look. 13,007. We did in the end. I was getting so worried about that in the end. Right. That's it from me. Thank you ever so much indeed. See you back for the closing bell. Have a wonderful afternoon. Take care of yourselves and each other.